This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved a soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. A selected set out today. David Gura back in for Paul Sweeney. Is there a Sweeney sighting tomorrow? Or do I have someone else tomorrow? Or
someone
do we
else.
know?
Damien, maybe?
It's a mystery. Damien.
Lisa Mateo's going to drive the ship tomorrow? Great.
Yeah.
That sounds good. We'll get to Lisa in a moment with an important data check here. Lots of good conversation coming up. For Global Wall Street, we start strong with Michael Darda. But first, we got to go to yesterday. Gura slept under his desk here last night. We did a marathon yesterday morning off of the Secretary of Defense. And this morning, am I right, is the Attorney General?
Attorney General and I think 5 or 6 others who are having their confirmation hearings on Capitol Hill
Many.
today. Yeah, but we were talking at the beginning of that hearing yesterday, would they get a second round of questions? Lo, they did not. Just one round. I think it took 4 hours for that hearing to wrap up, so we're expecting a vote on the Defense Secretary nominee on Monday, on Inauguration Day. Yeah.
And right now, with the gentle lady from Iowa,
Joni Ernst,
leaning that way, it looks like he may be
very much
selected.
So. Very much so. I think there was some speculation she would be, if not leaning the other way, leaning more toward it. That did not happen.
Zach Cohen and our government team with full coverage of these confirmation hearings will monitor the headlines throughout the day. We welcome all of you across the nation on your morning commute. Good morning on YouTube. Subscribe to Bloomberg Podcast. Moonshot growing each and every day. Thank you for what you can do most for me, which is to subscribe to Bloomberg Podcasts out on YouTube. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
All right, and we got futures on the rise, and this is ahead of today's U.S. inflation print. Also, bank earnings rolling in fast and furious, a lot of them beating estimates. So let's start with futures first. NASDAQ futures up 0.4%, 85 points. Dow futures up 0.5%, 218 points. S&P futures up 0.3%, or 22 points. Then we have the 2-year yield at 4.35%. That's down 1 basis point. The yield on the 10-year, 4.76%, and that's down 3 basis points. And we have the Bloomberg Dollar Spot Index down about 0.1%. All right, let's get right to it. Let's start with JPMorgan, and that's where I want to start with. Their shares are up about 2.5%. Adjusted revenue, $43.74 billion for the fourth quarter, beat estimates. It also sees 2025 net interest income beating estimates as well. Wells Fargo, that's what we'll move on to next. Their shares up 2.5%. Fourth quarter net interest income beat estimates. Then we go to Bank of New York Mellon. They're up nearly 2%. Adjusted EPS for Q4 surpassed estimates. We're moving on to BlackRock. BlackRock up more than 3%. Adjusted earnings exceeded expectations of fourth quarter. It actually pulled in an annual record of $641 billion in client cash, and its CEO said that this is just the beginning. Still waiting for that headline from Goldman Sachs as well as Citigroup. We will keep you posted. That is your Bloomberg Business Flash. David and Tom.
Lisa Mateo, thanks so much. We start strong in January with good voices for ample conversations here in our first section of each hour. Today, Michael Darda joins us from Roth. And we're thrilled that he could join. It's a synthesis of economics and the equity markets. Michael, I want to do it differently today with the bank earnings coming out. Are we concentrating our business? Are we concentrating our finance in this 2025, almost our image of the 19th century?
Well, Tom, that's a tough one. I would say, if we take a look at the backdrop here, we've had this big surge in the 10-year Treasury yield since mid-September of last year.
Yeah.
And everybody's trying to figure out, what is driving that. But the TIPS market can give us some clues. And, if we deconstruct the 10-year Treasury yield, we can see that about 2/3 of that advance has been driven by real rates or the term premium. Only about 1/3 of it has been driven by inflation expectation. Right. So this is really a real rate phenomenon for the most part, and it's happened on the back. If we look at the 12-month forward expectation for the Fed's policy rate, it's risen by about 115 basis points, which is exactly the rise in the 10-year Treasury yield since mid-September. of last year.
I thought of you, Michael Darda, the other day. Somebody mentioned what the high yield signal is growth. And of course, you're alluding to that with a real rate. But if I look at the bang up earnings of Delta Airlines, I look at JPMorgan and other companies to come, that growth in this comes from a spirited economy. Can you model forward ample nominal GDP to keep the act going?
Well, that's certainly the hope, Tom. I mentioned in our recent note with the employment report for December, there's a metric in there called average weekly payrolls, which is a very good proxy for nominal spending, nominal income. Average weekly payrolls are simply the sum of the growth rate of wages, hours worked, and jobs. And believe it or not, that metric has been averaging just over 5% growth for 21 months. I mean, that is an incredible period of nominal stability. So that's obviously a slowdown from the earlier part of the recovery when we were overheating. But the Fed, whether through accident or design, or whether they just got lucky, has really presided over an incredible period of nominal stability. And earnings are nominal. So the question going forward is, can that stability persist? I think there are risks there now with the Fed on pause.
Right.
And obviously, we have equity market valuations that soared to levels rarely seen in history. And with this rise in bond yields, we now have a negative equity risk premium for the first time since the spring.
Well, let me go there with you if I could, Michael. I was curious about that. So you mentioned that negative equity risk premium. And what does history tell us about that? What could that portend as you look back on past incidents when that's been the case?
Sure. It's not totally unprecedented. We did see a negative equity risk premium in the early and mid 1980s. Also 1987, prior to a big stock market decline. A negative equity risk premium in the early 90s, just before a 20% correction. And then obviously we had the tech boom and bubble in the late 90s, where we had a multi-year period of a negative equity risk premium. But that also ended with a nearly 3-year bear market for the S&P 500, where the S&P came down, 49%. So I think what it means here is that the equity market is vulnerable. The performance has been dominated by a handful of stocks in just 2 sectors. And that means that there's a lot of index risk if those stocks start to underperform. The good news is that active managers in the right stocks and in the correct sectors can outperform in that kind of an environment. But I think we should have much more subdued expectations, even if everything goes right for the nominal economy and earnings are positive and not negative. From these valuation levels, you typically see very weak 10-year forward returns. Not predictive in the short term, but eventually the short term becomes the long term.
Michael Darda with us for this extended conversation. We welcome all of you on your commute on Apple CarPlay, Android Auto, and of course on Sirius XM channel 121. Good morning, Boston 92.9. They're attempting to put a pitching staff together up there. We're still attempting.
Yes.
We're having the hot stove league, except there's nobody in middle relief.
It's a tepid stove, yeah.
Good morning, Mr. Bergman. You'd look good in a Red Sox uniform. David, pick it up, please.
Michael, amidst those subdued expectations, you talk about how there is opportunity here for a skilled stock picker to find something. Give us your lay of the land here. What are you looking at? Where do you see opportunity here in the months ahead?
Sure, David. Well, look, I think being a contrarian here on the bond market makes sense. So, we think the long end of the yield curve is actually attractive here. We've seen a big spike, but we've seen them in the past as well. In the fall of 2023, the 10-year hit almost 5%. I think we hit 5% just briefly. And that was a very good opportunity to add duration. Also, there was a great opportunity to get into utility stocks that went on a tear after that. The spring of last year also saw the 10-year Treasury yield up at 4 3/4. That was another good entry point. So even if it's for a multi-month trade and not something you're going to commit to over many years, I think it makes sense to kind of lean against the wind here. and to take a more bullish view of the long end of the Treasury curve. On the equity side, the energy sector screens the best in our work. One thing I think is important to consider when you have such high equity market valuations is to focus on sectors where those valuations aren't so pressing. And the energy space is the most attractive sector on a cyclically adjusted basis. Energy screens as the most favorable. So those are our two favorites right now, bonds and energy.
Michael Darda with us right now. It's time for the first massive 2025 surveillance correction.
We've been waiting.
And my excitement over hauling in the gentleman from Houston, I said, Mr. Bergman, it's Mr. Bregman.
Okay.
Excuse me. It was a folks pa, the highest level. Why don't you save the interview with Darda and continue?
Michael, I'd love to get your perspective on sort of where the Fed is in its fight against high inflation, and you've written, I know, just about the sort of the success we've seen here on the Fed's part in terms of engineering this shockingly successful period of nominal stability. Where are we now? And as you think about the months ahead, this new administration, the effect that might have, depending, of course, on what policies are put in place, how do you think through what the Fed's trajectory is going to be like here in the months ahead?
Yeah, I think we're headed into a period of uncertainty where we end up looking at supply side cross currents, and the Fed is trying to figure out how to address those. And, that's essentially why they're on a multi-month or indefinite, we've been calling it an indefinite pause. So where are they in terms of the inflation journey? If you look at the market-based indicators, the inflation threat is really largely behind us. Commodity prices, which soared in late 2020, 2021 into 2022, have been basically going nowhere over the last year, essentially flat and down from levels of last spring. The dollar has been on a tear. In bond market inflation expectations, they have picked up some from the fall of last year, but they're still in a zone consistent with price stability. And all of those indicators were flashing big time going into the delayed Fed tightening in 2022. So I don't really see the inflation threat that some other analysts and economists see out there. But the Fed is uncertain, and now we do have policy uncertainty with tariffs and a change in immigration policy. If those are supply side events, they tend not to have a permanent impact on inflation. It's more of a one-time thing. But it does create some uncertainty, and I think there was a bit more disagreement on the committee when they started moving last year, and now Powell has sort of put the Fed on the sidelines a bit as they take more information.
You seem constructive here, almost price up, yield down, particularly out the curve. Is the Fed going to pay attention to the ramifications of higher interest rates? And you're reading a history going back to your time with Jude Wininski, Michael Darda. Is the Fed sensitive to a 7-point mortgage rate?
Yeah, Tom, I think they are. I mean, I mentioned at the opening that, this surge in yields has been driven by real rates or the term premium. Now, the term premium, we have to estimate, it can't be observed, but that is supposed to be the part of the bond yield that is uncorrelated to the economic cycle. So in some instances, higher rates could be due to expected faster growth rates or a higher neutral rate. But a rising term premium is something different.
Right. So we haven't talked about it, Michael. Let's cut to the chase. Is this an overlay of the debt and the deficit that President Trump is going to have to confront?
Well, it could be, Tom. I mean, we've been running huge deficits at the wrong time in the business cycle, and pressure on the term premium could be the result of that. It could also be due to uncertainty in terms of the where the Fed funds rate is going to ultimately settle in a year or two. And we can see that in the Fed funds futures market. This move up in real rates in the term premium has gone hand in glove with the expectation of where the Fed funds rate will be 12 months out. And so you have a lot of people asking, why would the 10-year yield go up 100 basis points plus at a time when the Fed has lowered policy rates by 100 basis points? And the reason is that 12 months forward, the market was building in a higher terminal rate as policy rates started to come down. So I think it could be both of those things. On the fiscal deficit side, I'm not sure how much of it is due to that. I think that it's probably owing more to real uncertainty in terms of the terminal Fed policy rate.
Get one more in here, David.
It doesn't sound like you are too anxious about what we've seen with yields, them grinding higher. Doesn't seem like you see much downside risk there. Am I reading that right? Do you think the anxiety here about this, so much as there is misplaced?
David, Michael, let me translate that. Gura wants to know, can he buy Apple this morning?
Well, thankfully, I don't have to give commentary on individual stocks. I'm prevented from doing so. But I would say from a sector-based perspective, the areas that have really dominated the performance of the S&P 500, I would be cautious on from here, and we know what those are. I do think this rate spike, certainly, the residential real estate market needs this rate spike like it needs a hole in the head. So I do think it will be damaging to parts of the economy, no doubt about it. But if a surge in the term premium ends up being a drag on growth, then it's also self-limiting to some extent. So I think that can feed back into a story where we want to actually be more bullish on bonds here, still bullish on the energy space,
right.
Maybe, looking to areas that have not been dominating the performance of the S&P 500. Right. I think it's time for a bit of a switch up.
Michael Darda, thank you so much. Wonderful to have an extended conversation with you this morning. Futures up 22, Dow futures up 187. I mean, there's a lot of complexity there, David. What's great about Michael Darda is there's a lot of moving parts, and you try to piece them together. Almost all of what Jeffrey Yu does.
It had been a while since I'd spoken with him, but that's exactly right. Kind of the marriage there of hardcore economics and market analysis, and always good to talk to Michael Darda.
Again, futures up 22, the VIX stable 18.65. With our news in New York City is John Tucker.
All right, guys, in Los Angeles, crews from as far away as Canada still struggling to contain those massive blazes that broke out 8 days ago. And now the same combination of high winds, low humidity that set them off in the first place, threatening the region again. Los Angeles Mayor Karen Bass says the next 24 to 48 hours, they will be critical.
If you are told that you are in a warning zone, it would be advised that you actually take that opportunity to leave. Get packed, get everything ready.
Mayor Karen Bass says she's issued directives to help fast-track the rebuilding, but first, conditions on the ground need to improve. Israel and Hamas accusing one another of delaying a Gaza ceasefire. Well, officials say an agreement for a 6-week pause in fighting is still likely soon. Frequent failures to get a deal finalized have left everybody cautious. Secretary of State Antony Blinken, speaking at the Atlantic Council, says he thinks we are close.
I believe we will get a ceasefire. And whether we get there in the remaining days of our administration or after January 20th, I believe the deal will follow closely the terms of the agreement that President Biden put forward last May and our administration rallied the world behind.
Well, Blinken added that the sides are discussing a pause to allow for the exchange of hostages and a boost in aid to Gaza. Pete Hegseth, Donald Trump's pick to lead the Pentagon, appears to be on track for confirmation. During his confirmation hearings yesterday on Capitol Hill, he dismissed allegations of past misconduct as anonymous smears. And Elon Musk's space company, SpaceX, has had another landmark launch.
3, 2, 1. Ignition. And liftoff. Go Firefly, go iSpace, go Falcon.
A Falcon 9 rocket with a pair of commercial satellites on board, taking off from the Kennedy Space Center overnight. Both satellites are carrying lunar rovers heading into the private sector moon race. One from Texas-based Firefly Aerospace is named Blue Ghost. That's going to attempt a moon landing in 45 days. The other is owned by Tokyo's iSpace. The Hakuto R probe is going to try for its second trip to the moon after a failed attempt last April. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. David,
Tucker, thank you so much.
I love a space launch.
Space
I still do. It's nothing to behold. I've never seen one.
The interest in the moon is fascinating. Do you know why the moon is so bright at night?
Please.
Because, well, no, this is true. It's just because I was watching an old documentary on it. Most of the surface of the moon, the dust, is
luminescent,
made of glass.
Ah, not cheese, Tom.
Not cheese.
Surveillance correction number 2.
In my youth, after the third Jack Daniels, a lot of people
Jack Daniels of his
What
youth.
were you saying?
who were sitting around a table arguing ferociously about when the lunar module landed on the moon, how deep was the dust.
Uh-huh.
They didn't know.
Interesting.
Even with Ranger, Surveyor, Lunar Orbiter, they didn't know.
And that control computer
Until
that
they
was
landed.
totally overloaded, blinking and all sorts of error messages coming up. And Neil Armstrong decided, you know what? I'm a pilot and a damn good one. I'm taking the controls.
Yep, that's exactly what happened. But,
Tom Keene taking the controls
It
here.
was a mystery how deep the powder was. I remember well-meaning engineers screaming at each other. Anyways, a vignette there, back to the 1960s. Our vignette is forward in 10 minutes. Goldman Sachs earnings. From New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, it's CPI Wednesday. Forecasters expect U.S. inflation may have accelerated 0.4% in December, with core CPI unchanged, and that would boost the case for the extended Fed pause. Now, ahead of the data, we'll start with NASDAQ futures, up 0.3%. 74 points. Dow futures up 0.3% as well, 161 points, and S&P futures up 18. We have the 2-year yield at 4.35%, down 1 basis point. The yield on the 10-year, 4.76%, and that's down 3 basis points. To commodities, Brent crude $80 a barrel, WTI crude $77 a barrel. The Bloomberg Dollar Spot Index down about 0.1%. The kickoff to bank earnings still awaiting Goldman Sachs and Citigroup. Right now, I want to check in with JPMorgan Chase and Wells Fargo. They did report. We have JPMorgan up about 0.8%. We have Wells Fargo up about 3%. But Bloomberg's Alison Williams, she's going to break all that down in just a bit. So stay tuned for that. A few chip stocks taking a hit. This is after sources saying the U.S. will unveil more regulations to prevent those advanced chips from being sold in China. So because of that, you have TSMC down 2% in Taiwan, Samsung down about 0.3% in South Korea. Just want to check in quickly with NVIDIA up about 0.2%. We have Intel down just a fraction. And the side note, Intel planning to turn its venture capital arm into a separate fund with a new name. That division, more than $5 billion in assets. For on-demand news,
Maybe
24
BlackRock
hours
will buy
a day.
Intel.
Subscribe to Bloomberg News Now wherever you get your podcasts. That is your Bloomberg Business Flash. David
Lisa
and Tom.
Mateo, thanks so much. This is an honor, folks, and I'm not going to go into the minutia earnings. It's totally unfair to our esteemed guests. Alison Williams has been looking at bank earnings since Jackson turned America upside down.
All
and
right.
She is taking on new duties this year. Yes, I've had 3 people email in. Is Alison going to continue to follow the big banks? Yes, she is.
Recreationally.
She's got like a staff of 12 to do that.
Okay.
But she's also going to be head of global strategy for Bloomberg Intelligence Worldwide, which is a huge position involved. She's got frequent flyer miles like nobody I know.
Get access to the lounge.
Allison, I got Goldman Sachs rolling out. It's going from a 571 up to 581. Are these banks hiding how profitable they are? I look at JPMorgan. I look at BlackRock today. with the assets coming in under management is a basic strategy. Are they all playing down how damn profitable they are?
I mean, I think the banks are shining today. The numbers are good. And what's positive is really the net interest income guidance and the cost guidance. Those are two of the key things investors are focusing on. Both look at, JPMorgan guiding higher net interest income. Costs a little bit higher, but, net positive. Wells Fargo's numbers also looking better. The positive on Wells Fargo, continuing to sort of move past these regulatory related costs. They damped out the fourth quarter.
In your world, do you put your radar up when Mr. Solomon wants to get into private credit? And JP Morgan's going to be right
Everybody's doing it, Tom.
We need private equity. We need private equity. Alison Williams, been there, done that. Have we seen this before?
I mean, I think the positive thing, right? I mean, it's positive for bank investors is that they're doing it with other people's money. So I think that the risk in the past, right, was that they were investing their money. Volcker changed that, and Goldman had so much money invested that they've really taken a really long time to unwind it. But I think they are using their expertise. They years ago said, we're going to use our expertise, we're going to manage other people's money, we're going to earn fees. And investors like that. They like fees on managed assets as opposed to banks investing their own money. Regulators like that. But it has been a shift in terms of the amount of credit that used to be at the banks that's now managed. I mean, BlackRock this morning, 11.6 trillion.
With a T.
I mean, that is
amazing.
Really amazing.
And folks, David's got to jump in here. The Bitcoin part of BlackRock was teensy-weensy compared to everything else.
You say the banks are shining this morning. We have seen a fresh smile on a lot of these bankers as well since the election of last year. As you look ahead to what the expectations are for 2025, for later this year, how much of that hinges on this expectation that the regulatory landscape is going to be radically different? All the talk of Mr. Barr at the Fed Reserve is going to fade into the background. All the concern about new capital requirements are going to go away. How much is this sort of pinned on those hopes?
I mean, so for sure that has driven the rally in bank stocks.
That ineffable
right?
optimism that we have.
That optimism. Yes. And, and it's interesting, Wells Fargo in particular, which has strongly rallied. We know they have this asset cap. It's been in place for many, many years. It's unprecedented. So it just keeps getting longer and longer. But, for that specific issue, we would point out that's not a political issue. Right. They have things that they need to deliver, and they will continue to work on that plan. But in general, the banks are excited. So
the banks are excited. Have you been in the new JPMorgan building?
It's not open yet.
But she can
No,
walk
I was in
by.
the old building recently,
okay.
but not the new one yet.
I want to mention this because this is different. Wells Fargo is up 3%. Cy, thank you. Wells Fargo is up more on a percentage basis today than JPMorgan and Goldman Sachs. Usually, David, we don't see that, as Alison mentioned.
All, and it's all about the expectations, right? Yeah. So it is, the strength of the quarter. I mean, JPMorgan still leading the way with returns. But Wells Fargo, I mean, this is really, net interest income has been a big disappointment. Expenses have been a big disappointment. And I think the guiding is looking forward, especially since their management has tended to be conservative. Right. JPMorgan, they had already given their guidance for 2025, which was positive. Okay. We did expect a tweak. We got that. But as I said, a good set of numbers.
Cy, do we have Alison later in the morning, or is this her only appearance? Did you talk to her people? This is it, one and done.
We tried to get you yesterday, and that was because we got this news out of JPMorgan. What did you make of the shuffling of chairs, the departure of Mr. Pinto yesterday? What does that tell you about the direction of this bank post-Dimon whenever that happens?
I think it wasn't totally unexpected. I mean, Dan Pinto is sort of the person in place. He announced his retirement. I mean, the twist was that Jen got put in the COO position, so the immediate knee-jerk response was, okay, so she is the new heir apparent, and immediately
she said, no way.
Dashed.
No way.
But she did say, not at this time. Okay. So that's important, and it just may be that Jamie Dimon, this bank has built an amazing culture. They've created so many amazing leaders. They have a strong bench, and they may just want it to keep people speculating. It could be any one of these leaders.
Yes,
it could be Jed, it could be Marianne.
Right.
Doug Petno just got a nice promotion. It could be Troy. It could be
Mary
Erdos.
I got 8 ways to go here in the time left, but we got to go there. Over the last 10 years, folks, JPMorgan has grown at triple nominal GDP. Goldman Sachs has grown at almost triple nominal GDP. Citigroup is not. They've grown at roughly nominal GDP. I got Citigroup. Cy tells me, I can read it here, folks. It's the only way I know. 8 o'clock, Citigroup. How's Jane doing?
I think Jane is getting it done. Citigroup, as we know, back in Sandy Weil's day, he built this supermarket, everything.
Yes.
And then they've been selling ever since. Corbat did come in and do some downsizing. Jane has come in and she's done more. We're going to look to see if there's an update. They're spinning off their business in Mexico. So that's going to be a big sale that'll take place later this year. And it's been a slog. It's a slog for them. They also have some regulatory issues. We talked about that. We'll be looking for their expense guidance
now that
as
you're
well.
doing global strategy, so we're not going to be able to talk to you in about 90 days. Alison Williams, if JP Morgan's doing 3 times nominal GDP shareholder return over the last decade, a la Paul Krugman a week ago, are we seeing a concentration of capital as pre-2007?
I mean, it is interesting because coming out of the crisis, right, we have these systemic buffers, higher capital charges. JP Morgan faces, higher capital charges than their peers, and they've continued to get bigger. Part of that has been the global markets landscape, right? It's interesting to see what's happening over in Europe. The U.S. peers have gotten bigger and bigger. Europe has not, except for UBS that acquired Credit Suisse. I don't think anyone expected G-SIBs to merge. But I think what Europe needs is a cross-border deal, and it's just so difficult. It's just difficult, and the politics of it.
With Commerce Bank Unicredit,
it's tough.
It's not happening.
It's tough.
We're out of time. Congratulations, seriously, on your new
position.
You should see her staff.
I've got an amazing staff.
She's got Alison's walking around our headquarters
Ravi Shaluri behind the scenes.
Shout out.
He's feeding me all the numbers.
Excellent.
Okay, Alison Williams, thank you so much with Bloomberg Intelligence there. Really interested. That's the real conversation here.
Yeah.
They don't want people to know, David, how dominant
hiding
they are.
in the cushions.
Yeah. You know what it is? It's the Christmas Club.
I see.
They've got the Bank of America coming up tomorrow. Futures up 18. Stay with us on YouTube. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing. This is ahead of as bank earnings start to roll out, but also ahead of more inflation data. Forecasters, they expect U.S. consumer prices to show a fifth month of firm increases. Meanwhile, we did get some housing data in. The MBA says U.S. mortgage rates topped 7% last week, reaching the highest level since early May. Let's get to NASDAQ futures up 0.3%, 82 points. Dow futures up 0.4%, 186 points. And S&P futures up 0.3% or 20 points. The 2-year yield at 4.35%, down 1 basis point. The yield on the 10-year 4.76%, and that's down 3 basis points. To currencies, we have the Bloomberg Dollar Spot Index down about 0.1%. We have the Japanese yen stronger at 156.92 against the dollar. The euro weaker, British pound weaker. Bitcoin right now up about 0.4% at just over 96,000. Few companies making news. We'll start with Tesla. Sources saying it plans to suspend part of the line's manufacturing that recently refreshed Model Y SUV in Shanghai. It's going to be for about 3 weeks over Chinese New Year so we can better optimize equipment. And then meanwhile, you have Tesla owner Elon Musk. He's being sued by the SEC. It says that he cheated Twitter shareholders out of over $150 million by just waiting too long to disclose his growing stake in 2022. That was ahead of a takeover bid. And another check-in with big banks as earnings season kicks off. Still awaiting Citigroup. Those shares right now up about 1%, but we head over to Goldman Sachs up more than 1.5%. JPMorgan up about 0.7%, and Wells Fargo up more than 3%. That is your Bloomberg Business Flash. David and Tom.
Lisa, thanks so much. This has been hugely anticipated. Oil, petroleum, moved the other day so much. When Javier Blas was on, we could barely talk about what are called the softs, which are the commodities away from oil, the commodities away from minerals, industrials, and that. Kona Haque is expert. She's with ED&F Man and joins us now. Kona, coffee's a triple off of COVID, up 100% and then up another 100%, up 200% since early 2000. Is it just drought? Is the drought of the California fires no different than the drought of Vietnam and the drought of Brazil and Colombia?
Well, yes, I guess in the sense perhaps it is all down to climate change, the fact that the extremity of it, the fact that it's so severe and so long lasting. I mean, Brazil's drought was certainly one in a 50-year event. And I think Vietnam also had an extreme drought, and California, you can see what you can see, I guess. It's terrible. But yeah, the impacts on a commodity like coffee, which is so vulnerable to climate change, and in particular variations in temperature, can really impact their yields. And yeah, it just didn't recover. So the Brazilian crop's going to be small. This is on top of a Vietnamese crop, which is also smaller than it should have been. And what we're facing with is a 5th consecutive global supply-demand deficit for coffee. And I think this is what prices are telling you, that something's got to give. You cannot kill demand fast enough. You cannot recover supply David, fast enough, and see prices are going up.
Are you going to give up your marginal? Are we going to substitute into tea?
No, I do tea in the afternoon, though. Coffee in the morning, tea in the afternoon.
Do you drink coffee, Kona, or tea?
I am a tea drinker, I must admit.
That brown water. Good morning, Ted Lasso.
Kona, in the pre-dawn hours, I'm fumbling around. I pick up the Financial Times this morning. There's a headline: "The China commodities supercycle is over. Will there be another?" Just an incredible deep dive into the conclusion of that supercycle. Of course, pinned so heavily on steel. What's your answer to that rhetorical question in the headline there? Will there be another one? Has the outlook changed measurably?
Yeah, I agree. I don't think there's going to be another one. It was a big one. China single-handedly lifted all commodities since the mid-2000s. And for a good 10 to 15 years, the commodities enjoyed it. But nothing lasts forever. China's maturing. You know, it's got past the very industry-heavy, manufacturing-heavy phase of development. It's now got to focus on consumption and domestic demand, not necessarily investment-led, export-led. You know, China can no longer be the factory of the world. It's got its own needs. It's developed its airports, it's developed its cars and factories. So now it's more about the higher level service type economy. And yes, that is unfortunately less commodity intensive. So you're not going to see much of demand to the extent that you saw before. But you might start seeing different kinds of commodities consume, you know, the higher value stuff. So maybe like the coffee we just talked about before, that's where they're moving towards. But no, the industry side of things, I think metals Iron ore, definitely that phase is over. And the housing sector tells you all of that. The property sector has been in a real rut for the last 3 years, and they just can't kickstart it despite record low interest rates. So it's not happening again. And we have to wait for another region, maybe Africa at some point, for the next big boom.
You know, I would love to ask you about U.S. trade policy, tariffs policy. Of course, we're waiting for clarity on what that might look like in detail. But when you overlay that onto your world, onto the commodities world, how much does that map stand to change remarkably as a result of whatever tariffs are put in place by this president-elect?
Yeah, it's something that we're all watching very clearly and closely. So, I mean, just look what happened recently in oil, right? The fact that you've been put, okay, it's not tariff, it's sanctions, but the fact that you've got sanctions on Russian oil is now causing oil prices to get back to the $80 level, and a real movement across oil tankers and shifting, so the Saudis, China would used to be able to get it from Russia. Now they're going to have to source their oil from Saudi and the Middle East. There's going to be more of that. If soybeans gets targeted, if the US, if China retaliates and says, okay, I'm not going to take US soybeans because of the tariffs, then maybe they have to go to Brazil. So, there are lots of movements and moving parts that needs to be watched, and then who can fill the gap. I think that's the interesting thing. As a commodity trade house, that's what we look to see.
Kona, I got 30 seconds. I see olive oil. Javier emails in from London and says, ask her about olive oil. I got olive oil in Spain down 49%. Can the same thing happen with coffee, orange juice, cocoa, the others that are extended?
For coffee, not anytime soon. Maybe next year when you start seeing a crop in Brazil pick up massively. Cocoa, 49%. It's so extended, it's possible. But again, not anytime, not in the first 6 months. Eventually. Okay. Everything has to come to light.
Kona, please try coffee today. I beg you. Try a cup of coffee. Kona Haque with ED&F Man right now. Next time she's on, we're asking her to try Sanka. Hasn't worked out.
Keep a stash at your desk.
With our news in New York City, John Tucker.
All right, let's start with this. The death toll remains at 25 for the wildfires that have devastated L.A. for more than a week. Today, more than 10 million people facing the same tropical storm-force winds and bone-dry conditions that started the fires in the first place. But Palisades Fire Incident meteorologist Rich Thompson says fire crews and residents should start to get a break tonight.
Looking into next week, we have another round of Santa Ana winds potentially affecting the area. But definitely, at least for the weekend, we should get a couple of days respite from these Santa Ana winds.
Thousands of firefighters battling the flames, some as far away as Quebec. President-elect Trump's pick for Defense Secretary Pete Hegseth faced questions from senators about his qualifications for that role. A Democratic Senator, Tim Kaine, confronted Hegseth on why he failed to disclose to Trump's team that he had paid a woman in a settlement who accused him of sexual assault.
If it had been a sexual assault, that would be disqualifying to be Secretary of Defense, wouldn't it?
That was a false claim.
So you
talking about a hypothetical.
Well, despite tough questioning from Tim Kaine and other Democratic senators, Hegseth does appear on course to win confirmation. Russia today launched a major ballistic and cruise missile attack on regions across Ukraine, targeting energy production and compelling authorities to shut down the power grid in some areas despite the freezing winter weather. The Russian Defense Ministry said it launched a strike on critically important facilities of gas and energy infrastructure that ensure the functioning of Ukraine's military-industrial complex. And listen up, Bob Dylan fans could get a piece of history from the iconic singer and songwriter. An auction takes place January 18th. Huge collection of Bob Dylan memorabilia set to hit the auction block.
Hey, Mr. Tambourine Man, play a song for me.
Somebody think that's good. Julian's auction says 50 items connected to the iconic singer-songwriter will be up for sale, including the early handwritten drafts of Mr. Tambourine Man, his first #1 hit.
Why isn't that in the Smithsonian or the National Archives? I don't get it. We got to ask Mr. Rubinstein to acquire that.
Yeah, more ephemera.
The journalist Al Aronowitz, I think I'm mispronouncing that, the godfather of rock, of journalism in rock. He's the one who's got it. So
Jeff Beck's selling guitars, and also Mark Knopfler just sold a whole bunch of them.
You're not buying them, are you?
No, I'm not. Mrs. Keene said just the marginal guitar ain't going to happen in 2025.
How many guitars in your collection?
Can't count that high.
Really? That tiny little
Play them all at once.
You are listening to Bloomberg Surveillance. We'll have more news in just a moment. Tom, Keene, and David Gura.
Now a look at the front pages.
What's making news around the world?
Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. The daily look at the front pages, the Lisa Mateo moment. It's brought to you by IBKR. Will the average U.S. temperature in January 2025 be greater than 34 degrees? You can trade your prediction at Interactive Brokers. Buy yes if you agree, no if you don't. Correct answers earn $1. Go to ibkr.com/forecast. Inside Temperature Baseball with Interactive Brokers. Thank you for that. With their support, we thank them for their support. Lisa, what do you got today?
All right, congestion pricing. We've been talking about it all the time. So yes, traffic is down. This is from the MTA. So the data says the number of vehicles entering New York City congestion pricing zone fell 8% last week compared with the average January workday from 2022 to 2024. But the problem is that this is what the Wall Street Journal is pointing out, is that the business district, which is still recovering from the pandemic, is starting to take a hit, especially the parking garages. You have parking garages. One CEO told them that they've had a 20% drop since the congestion pricing started. Then, of course, you have the different businesses in the area, too. But also, you can't forget the taxi drivers who are now complaining because less traffic means shorter rides on the meter, and there are fewer people hailing cabs too. So this is kind of the good and the bad to it, which we knew was going to happen.
I have seen it, and I mentioned this yesterday.
We'll get Mr. Tucker in for a spirited debate with you about what you've seen.
I mean, John gets going, but I go down Lexington and I go across 55 to Michael's Diner, and there's a lot less traffic. Fact. No question about it.
I've noticed rolling into an early hour this week. You're getting on my lift. It comes up. Yeah. We're getting hit with it as I come in from Brooklyn.
Did they give you the Bentley?
Yeah, it was on loan. Lisa still has.
Joe Weisenthal out on Twitter saying the subways are much more crowded. Next, Lisa, what do you got?
They are, and also the trains, New Jersey Transit is a lot more crowded than I know.
Maybe that's why Sweeney's not in.
Maybe he's still waiting.
Doesn't stand.
This over to the New York Times. So we've been talking about the Los Angeles fires, the air quality. So apparently the air quality is improving, but now there's another threat that's starting to remain. So the air quality measured on a scale from good to hazardous, it was good to moderate Monday, mostly good across Los Angeles Tuesday. Similar condition expected today, but the air quality manager is saying that the wind-blown dust and the ash, that is a big concern because you can have the lightest wind that can pick it up and take it across the county. And it has a lot of toxic carcinogenic material. And what they're saying is that, you can protect yourself, of course, with the N95 or the P100 mask, but they're saying the ash is something that has to really be considered and looked into now, not just the air quality, but that as well.
We're in touch with friends and family out there, and this is something I've heard anecdotally, especially folks with kids worried about this and how much of it there is, and even if they've kind of escaped the immediate threat of the conflagration, the house is reasonably safe right now. It is a worry, Tom, what's in the air and how bad that is.
And Rob Carolyn making clear, it's not over, and if anything, it would migrate south. He did say there's a Hail Mary of some participation, perhaps, in the coming days, but it is still, for all of us exhausted by this, it's by no means over.
Right, and winds less bad yesterday than I think were forecast, but today a new day, and we'll see what it holds.
Yeah.
Moving on to the job market. This was in the Wall Street Journal, too. They're saying that even Harvard MBAs are struggling to land jobs, so it just goes to show you the perspective of what's going on. This is from the Harvard Business School itself that says 23% of job-seeking Harvard MBAs who graduated last spring were still looking for work 3 months after leaving campus. So the reason why that 3 month is such a critical figure for them is because they kind of use that to get the professionals into the school itself. But it just goes to show you the difference in how it's starting to change. But there was one school who did report an increase, like they had more students kind of being hired after, and that was Columbia Business School. But it was just
because of Abby Joseph Cohen.
That's it. That's the reason.
Single-handedly. They go in on their resume, I took a course with Abby Joseph Cohen and survived. That's why. Lisa Mateo, thank you so much. The newspapers today, and with the different layoffs and new right-sizing, Meta,
we had
Facebook,
Meta yesterday, 5%.
And Microsoft as well. I think it's worth looking at. A New York City song, Suzanne Vega, Luca.
Yes, I think I'm okay. Walked into the door again. If you ask, that's what I'll say. And it's not your business anyway. I guess I'd like to be alone. With nothing broken, nothing wrong. Just don't ask me how I am. Just don't ask me how I am. Just don't ask me how I am.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Barr and Sweeney sidelined. They're on the injury list. They'll be in the next couple days. We're looking forward to getting them back. David Gura, yeoman's duty yesterday, 5 hours.
5 hours, the ultra marathon of surveillance.
We survived.
We did. Barely, though.
Did the Secretary of Defense nominee survive?
It looks like he has survived. That vote will take place in a couple of days on Monday of next week. But he faced less opposition than I think a lot of people expected he would, even from the senator from Iowa.
Citigroup out with their earnings moments ago, and it is not JPMorgan, it is not Goldman Sachs, it is not Wells Fargo. Actually, from a 73.50, they went up, then they went a little bit lower in price, and now they're pretty much trading on spot. They are not up 1 or 2 or 3%. Ms. Fraser and company announced a share buyback of $20 billion in stock. The ratios are there, but it's just not JPMorgan.
Alison Williams a moment ago saying that Jane Fraser getting it done, but this has been a slog for both her and I guess Charlie Scharf as well, if we want to pull back and look at Wells Fargo too.
Well, but finally Wells Fargo having a relatively a good day. But the ratios return on I don't know what the right ratio is. It's a ratio they announce here. It's low single digit where the others are 15, 17, 20%. And Citigroup
more stratospheric, yes.
We'll have to see on that. Now Citigroup up $1.50 here, so it is beginning to participate as the headlines come out. We welcome all of you this morning across the nation on your commute. Thank you so much for the lift on YouTube. That is our new distribution. Bloomberg Surveillance this morning across this nation. Brought to you by Kona Haque Advisory Assurance Tax. With potential changes on the horizon, will you need to rethink your tax strategy? Kona Haque Tax Advisors can help keep your business at the forefront. Foundational support of what I do. Kona Haque, thank you so much for your support. From the Interactive Broker Studios of Bloomberg Business Flash, the Citigroup Report, Lisa Mateo.
You got it. And let's start with those shares. They're up more than 2.5% right now. But like you said, fourth quarter markets revenue beat estimates. Also buyback of $20 billion in stock. A lot more to dig into that with that story. We'll get to JPMorgan Chase, Wells Fargo. Both posted hefty profit rises for the last quarter, boosting shares. So we have JPMorgan JPMorgan up about 0.9%, and we have Wells Fargo up more than 3%. Profit at Goldman Sachs more than doubled. Goldman Sachs shares up more than 2%. We have Bank of New York Mellon, can't forget them as well, up more than 2.5%. They reported adjusted EPS for Q4 surpassed estimates. And finally, we do have BlackRock. Those shares up more than 2%. Adjusted earnings exceeded expectations in the fourth quarter. All that said, let's get to futures. NASDAQ futures up 0.3%, 80 points. We have Dow futures up 0.4%, 204 points. And S&P futures up 0.3%, or 20 points. The two-year yield at 4.35%. That's down 1 basis point. The yield on the 10-year, 4.76%, and that's down 3 basis points. And we have the Bloomberg Dollar Spot Index down about 0.1%. Don't forget inflation data coming out in about a half hour from now. That is your Bloomberg Business Flash. David and Tom.
Thanks so much. Greatly appreciate it, Lisa. Joining us now with wisdom forward on the equity markets, particularly Robert Teeter, with just wonderful perspective with Silvercrest Asset Management. I mentioned earlier to the great Alison Williams that over the last 10 years, JPMorgan's popped 3 times nominal GDP per year. Goldman Sachs has done 2.5 times nominal GDP per year. Are banks supposed to do that? Are banks supposed to outstretch nominal GDP?
Well, banks had been becoming the utility story of old post-crisis with regulation and whatnot, but they've done a great job, I think, the bigger banks in gathering share, and particularly after the SVB crisis a few years back, the big banks have taken share. The fortress balance sheet at JPMorgan gathers share. It attracts things like a magnet in terms of business opportunities,
Right.
and so that's how they've out-earned.
Where'd you get your first checkbook? Mine was Manufacturers Hanover. I used to just like to say, I have a checking. I couldn't shave. I have a checking account at Manufacturers.
What were you writing checks for?
And
What was the first check?
To my
That's what I
mother,
wanna
because
know.
I borrowed
Yeah,
money
I
from her.
borrowed the car.
Where was
yeah.
your first check? Which bank?
It was a bank out in Pennsylvania, Southwest Bank of
Southwest
Pennsylvania.
Bank of Bucknell.
Very tiny regional bank, but
It's
here in
done.
New York, Republic Bank on 86th Street
Okay,
back in the day.
Are we going to end up with 4 banks?
I don't think so. You know, the regionals will get through this. There's a role that they play. I think some of the business that they conduct, the majors don't want to conduct. And you're seeing a lot of things move away from banks as well. And so, you know, the rise of private credit has been a challenge for some of the smaller banks. But I don't think we'll see them all fade away. There is an inordinate number of banks here in the U.S. relative to what might need to be in place, but they're not going to all go away.
When you look at the earnings today and kind of dovetail that with what's happening in the economy, what's happening with yields, sort of how does financials look to you in the months ahead? Yes, a lot of good news today, a lot of happy talk about the future from the banks themselves. How are you feeling about financials broadly?
Yeah, so far so good. It's been a good environment for financials in terms of their earnings power. Looking at it from a macro perspective, I always look very closely to see what the look through is on the consumer, on business activity, on potential defaults, reserves, things like that. So far, everything I've seen this morning has looked good. And this is kind of the first hurdle of earnings season, and we seem to have cleared it thus far. So that's a good sign.
I am very curious just about how you're thinking about volatility in the year ahead, and we haven't seen kind of dramatic spikes in volatility that we might expect. Yes, we've been looking at kind of the grind upward in bond yields, but do you expect this is going to be volatile for 3 months, 6 months? When do you think we're going to get more clarity on a lot of the uncertainty that we're facing? Yes, from the Federal Reserve, yes, from this president-elect. There is no surfeit of how much uncertainty and kind of anxiety there is about where things are headed.
Yeah, I think at least the first half of the year and perhaps the whole year will be quite volatile. We've come in at a very high valuation level. That means that every data point that comes in is going to be subject to a lot of scrutiny. Any misses, I think, will be very heavily punished, whether that's on the macro side and inflation or on the earnings side, companies missing. I think we'll get through it okay, but there's also going to be a lot of news on the policy front as well. I think by and large it will be positive, but the implementation and interpretation of that will change day to day.
You nail it. The people that stumble are going to get hammered. I'll go with you on that. That means stock selection is vital. Within stock selection, do you narrow on a sector basis or on an individual stock? Do you bring down the number of equities within a given portfolio?
I think we've moved from a sector environment to a stock selection environment. So we've come out of this high growth era that we've been in post COVID. I think growth is slowing. We don't see a recession on the horizon, but with slow growth, you have slow top line growth. And so therefore the question is margins. We've done a lot of work in looking at margins across sectors that have improved margins, companies that have improved margins. And we think that's the real story for 2025 is controlling your destiny.
Give us one example of that.
Yeah, so I read through all the transcripts, and the past few weeks, you've seen a big uptick in stories, anecdotal, big companies, small companies. The model that we put together shows that you can use AI to hold the line on labor costs while you're increasing revenue. So we don't see it as a story that you flip a switch, you fire a bunch of people, and it's a binary type of thing. We see it as a story where you can grow labor costs much more slowly. And we model that out to something that can increase margins across the whole U.S. 2 to 3%.
I need to go 3 decimal points here. Down the income statement, operating income or even above that, some form of goofy EBITDA. I'm sorry, Charlie Munger. Something EBITDA-ish. How many beeps are you slapping on for AI 3 to 5 years from now?
2.5% to 3% profit
250 beeps.
Potential. Yeah.
I am not sold. You got to sell me Robert Teeter. Save the interview, David. I don't buy it.
Robert, we, of course, have been following what's going on in California. And as I look at your most recent note, you have a line in there just about what these fires might mean for the economy broadly. And I'm very curious. We've kind of tried this out with a few guests over the course of the week, see who's thought about this, see who's kind of begun to entertain what it might mean for the economy broadly. How are you thinking about what effects it might have as we look at a disaster of just of an incredible scale?
Yeah, so there's two parts of it. The one that's been widely talked about, I think, is the normal sort of natural disaster story. You see a downturn and then a rebuild, and it's not a big deal. The thing that I think is pretty interesting for first quarter is the longer it goes on, the more you have suppression of spending in a pretty rich area of the economy. So Los Angeles, about 3% of U.S. GDP. And it just raises the stakes for a potential miss on consumer spending, which in the short term could be a problem. So
a major shout out. We got to go to Veronica's going to walk out of the room if we don't get to her. But Robert Teeter, Stephen Ratner, who's working with Joe and Mika on making some charts up. Brilliant. I had no idea the dominance of California and Los Angeles County within America. I'm being educated within this disaster.
Yeah, a lot of income there, a lot of GDP, a lot of production, a lot of spending. So I'm really looking at it from the consumer side and taxes. Yes,
Robert Teeter, thank you so much. Looking for consumption off of this tragedy in Los Angeles. Really appreciate it. That was brilliant. She's still in the room? Yeah, she's here. Veronica Clark joins us right now, U.S. economist at Citigroup. No, she's not going to talk about earnings. She's not going to talk about international capex from Ms. Fraser. We're going to talk about the American economy. Veronica, how have you and Andrew Hollenhorst amended your GDP call in the cacophony of news the last 10 days?
Yeah, I think the most surprising to us, of course, is that we have been seeing labor market weakness, and we're thinking that was going to get even more prominent, accelerate, and we really haven't seen that. So we did have very positive, undeniably strong employment data last Friday. So it does seem like there is maybe some more stability to the labor market, but I think the issue for us is that what is really driving the weakness in the labor market is very low hiring, and we don't really see signs that is changing. So even if we're in this somewhat stable zone right now, it doesn't necessarily look like that stability is durable until something changes in terms of hiring. But yeah, activity has admittedly been a lot stronger. We did raise our growth forecast a bit this year.
David Gura wants to jump in, but what's your unemployment number at the end of the year? Do we get to a sated 5% unemployment rate?
Yeah, we do still have that, even though it's taking a bit longer to get there in the forecast that we had maybe a couple weeks ago. I think we might see some stability early in the year Q1. There have been seasonal adjustment issues around the holidays for a while. Maybe it's really not until the spring when hiring typically picks up in the spring. You get new labor force entrants, people finishing school and entering the labor force. If hiring is still so low, then maybe that's when we see the sharper rise in the unemployment rate.
Tom, the English department at UNC is in Greenlaw Hall. Economics is in Gardner Hall. Veronica has been there more times than I. It was a place I avoided. But I bring that up to ask you a very basic question, one I don't know the answer to, and that is we get PPI, we get CPI. How does all of that feed into PCE, which is the thing we know the Fed likes to look at the most?
Yes, yeah, that is the Fed's preferred measure. Yes, spent a lot of time in Gardner Hall at UNC. Yeah, we got the PPI data yesterday. Once we know the PPI and the CPI for a month, we know basically 90% of PCE inflation. We'll get most of that today. We did see some interesting elements in the PPI data yesterday, stronger airfares, softer financial services. Overall, this is, I think, still coming out with a PCE for December that looks pretty favorable for the Fed. There is some volatility in the inflation data, but the trend, if you average through that volatility, does look like it is slowing for now.
Airline fares. You're paying attention to airline fares. Why is that so important here as we try to piece together what the inflation picture looks like today?
Yeah, it's an interesting component. It's a really volatile component. We do know, of course, that consumer spending has been resilient. People are traveling. That, of course, has been a really strong element of inflation the last couple of years. All the post-pandemic travel. It has slowed some, but it was very strong in the PPI data yesterday. And it can sometimes, not always, correlate with the CPI airfares. Maybe that's a bit of an upside risk for CPI in just a couple minutes. But we actually are thinking that this is a bit softer than consensus core CPI. We have a 0.2 rounded for today's number.
Veronica, we're sifting through all of these bank earnings, paying attention to the headline numbers and how much money the big banks are raking in. Lost on us, perhaps, this kind of bifurcation that we're seeing in this economy today. And you look at poor people, not the middle class or the upper class, people who are really struggling to get by. You look at sort of how much people are putting on credit cards. What is that telling you about sort of the bifurcation of the consumer in the United States today?
Yeah, this is a trend that's been pretty persistent for a while, and it doesn't seem to really be improving a whole lot. If you hold assets, you own a home, you hold equities, you're feeling pretty good. You're feeling that wealth effect of spending. Although equities maybe have been coming off their highs, as it looks like the Fed is not going to be cutting as much. So maybe you get the reverse wealth effect there. But certainly, the lower income end of the spectrum, credit card auto delinquencies are very high. Savings rates are very low. Even right. In terms of businesses, small businesses do look like they're trying to cut labor costs more. Those are people who are going to be a bit more rate sensitive, maybe.
Veronica, I'm helpful here in that we've gotten through the last 3 minutes without mentioning the Fed, because I'm worn out from the Fed parlor game. But let's go there. Hollenhorst and you nailed a higher interest rate regime. Then you turned around and went the other way. My head's spinning. What's the Citigroup call right now out 1 year?
Yeah, it does come down to the fact that we have seen these last couple years as a cycle, maybe a drawn out one, but we had a supply shock that caused high inflation and necessitated higher rates, and then rates are restrictive, and that's slowing demand, and we still think that results in a more obviously weakening labor market. Obviously, it's taking longer to happen, but if we do see a labor market like that, I still think that this is a Fed that's cutting a lot more. So we do have the Fed starting to cut again in May, and still have 125 basis points total for this year.
Veronica, thank you so much. Veronica Clark with Citigroup. They're U.S. economists, and congratulations to Citigroup for some intense work
against consensus, but often right.
Yeah,
I should say.
Yeah. Well, it's they're doing it differently. It goes back to Catherine Mann, now the Bank of England, and the guy that made modern Citigroup economics, Willem Bouter.
Yes.
And they brought an academic load to it that Andrew Hollenhorst has driven forward with Veronica Clark. Which hall was this at?
Gardner Hall is the economics department. Green Law, English. I only went. My dad's there.
Did you cross the street to go around it?
We did. We didn't go anywhere near it. But Veronica, like me, from North Carolina, and very proud alumna of UNC.
Very good. We will continue here. Futures up 20. The banker is Bank of America tomorrow. We'll give you a summary here along the way of what they all did. That would be Bank of New York, JPMorgan, Wells Fargo, Goldman Sachs, and Citigroup. With our news in New York City, John Tucker.
All right, guys, more cabinet confirmation hearings coming up in the Senate today. This includes for Secretary of State nominee Marco Rubio, and Bloomberg Government's Jack Fitzpatrick has this preview.
If you're looking for the easiest route to getting Senate Republican support for a nominee, selecting a Senate Republican who is definitely seen as intelligent and experienced on foreign policy issues like Marco Rubio, that's probably the safest bet.
Also watch for hearings today for Pam Bondi to be Attorney General, Sean Duffy for Transportation Secretary, Energy Secretary designate Chris Wright, and Russ Vought, the president-elect's pick to head the White House Budget Office. President Joe Biden, he's going to deliver a farewell address to the nation tonight. He'll highlight his presidency's economic achievements and attempting to define his legacy. His approval rating, by the way, has fallen to 36.1%. Millions of Southern Californians on edge as a final round of dangerous fire weather forecast for the region. The massive blazes have killed about 25 and destroyed thousands of homes. As it stands now, the biggest fire in the Palisades is 18% contained. The Eaton fire, which destroyed much of Altadena, is under 35% containment. Estimates of insured losses are running as high as $40 billion. A ceasefire deal for Gaza may be close, but critics say even if approved, it doesn't go nearly far enough. As many as 100 hostages still being held in Gaza. At least a third of them are believed to be dead. The relatives of hostages held in Gaza holding out hope, but Shay Dickman, whose cousin was killed in the captivity, is also concerned only the first stage of the deal is on the table, which calls for only some of the hostages to be released.
We are very disturbed by the fact that 465 days after October 7th, we have not yet agreed upon all of the hostages coming home.
Well, the remaining two stages of the deal have yet to be agreed to. And, you know, the enormity of the destruction in Southern California quickly snuffed out all the festiveness in the movie industry's high season of celebration. So the Oscars, they are on schedule.
But the nominations are delayed? Is that the drill?
Yeah, that's the drill so far. It looks like it's going to be transformed, the ceremony itself.
I can't imagine.
To some sort of telethon-like element to accompany the Oscars. So a lot in recent days, a lot throughout the industry have voiced suggestions for how the broadcast could be reconsidered. So it's going to change, it sounds like, right up to the last minute.
Right. Yeah, I agree. It's hugely flexible, as is the weather. Rob Carolyn, of course, and this continuing.
They are going to happen, though, and I saw that there was a piece in the Hollywood Reporter yesterday, them pushing back on these reports that it might not. They might skip the Oscars completely.
I can understand that as well. Yesterday, David Gura and I, an extensive 5 hours here into Joe Matthew and Kaylee Lyons. Not today, but Pam Bondi is front and center in the leading light I see as she was a Tridelt down in Florida.
We'll see if that gets mentioned
David
in
Gura?
the opening statement.
I don't think they're going to mention that she was a Tridelt.
Some sisters from her sorority there in the confirmation hearing. She was the Attorney General in Florida, and perhaps more notably than that, she was a personal attorney to Donald Trump and was his attorney, I believe, during the first impeachment trial that he faced in the U.S. Senate. So she's somebody who has been, like many of these nominees, very closely allied with him, has been friendly with him, and she is going to face, I think, a less difficult path forward here than the man that Donald Trump picked first for the job, that being Matt Gaetz, another Floridian who, of course, withdrew from that nomination.
So this won't be the uproar that we saw yesterday.
No, I think that there won't be a friendly hearing. There will be Democrats who will put up resistance to her, but it's not going to be as acrimonious as the first one that we saw yesterday.
Do we have others today besides Pam Bondi?
I think 5 others, Doug Burgum, I think, is appearing today for Interior. So, yes, it's going to be a busy day on Capitol Hill.
Okay, we'll continue to apprise us. And, of course, Joe Matthew and Kaylee Lyons leading the way on our government coverage. Balance of power. Futures up 19. The VIX 18.60. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we were moments away from CPI data. Consumer prices forecast to have risen 0.4% last month. Ahead of it, we have NASDAQ futures up 0.3%, 77 points. Dow futures up 0.4%, 211 points. And S&P futures up 0.3%, 421 points. We have the 2-year yield at 4.35%. That's down 1 basis point. And the yield on the 10-year, 4.75%, and that's down 3 basis points. We have the Bloomberg Dollar Spot Index down about 0.1%. Quick check-in with big banks after bank earnings. We have JPMorgan up about 0.1%. We have Goldman Sachs up nearly 2%, and Wells Fargo up about 3.5%. Can't forget Citigroup up about 3.5% as well. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. David and Tom.
Lisa, thanks so much. Neil Dutta with us right now with Renmac here on the CPI here. We're going to go to Lisa here at 8:30 on the data. We got to do this first. I mean, there's a headline out. David Gura, quickly here. U.S. to ban red dye number 3 in food as soon as Wednesday. And the first thing I did is look, is that in my cherry in my Manhattan?
No doubt it is.
And there's a confusion here over red dye number 3 and
Or
red
5.
dye number 40.
Okay, sorry.
Okay. But this is what's to come with the
I
administration.
believe this is a petroleum-based coloring dye that's put into a lot of food and medicine. So this is erythrosine. And so we've heard from Robert F. Kennedy Jr., of course, the president-elect's nominee to be the head of the Health and Human Services, that this is going to be a priority of his to get rid of a lot of these additives to food and medicines. Anyway, we'll see what happens with that. Wednesday, look ahead to
Wednesday, we'll look for that. Right now, we turn to the news of the day, not JPMorgan. Neil Dutta knows it's CPI. Is the disinflation vector still in place, Neil Dutta?
Well, I think so, Tom. I mean, for me, it comes down to the labor markets, and labor market conditions are still generally cooling off. I mean, if you look at the quits rate in the private sector, it actually hit a fresh low the last time that data point was released, and that tends to set the table for the trajectory of compensation. And so, my sense is that measures like the employment cost index will continue to moderate through the first half of this year.
Jason Furman at Harvard has an ecumenical study of many different moving averages. Does Neil Dutta look at month over month, or year over year, or 3-month or 6-month moving averages?
Well, of course, we look at all of that. But, generally speaking, I think that compensation growth will equal inflation plus productivity over time. And, productivity is running about 2%, which appears to be the case over the last year. Then, compensation growth, moving to 4% and lower is broadly consistent with the Fed's longer run inflation target.
Neil, 2 minutes out before these data, Tom asked about the ecumenical studies of Jason Furman. Let me just ask you the basic question here, which is, what are you going to be looking for in this CPI print this morning, and what would be worrisome to you kind of under the hood of that report when we get it?
Well, I mean, I think the big news in November was the fact that housing rental inflation cracked. And we know that's the stickiest price of all. So if that starts to unwind, I mean, that would be a problem, I think.
Right.
I would keep an eye on things like, obviously non-housing services. I mean, it's important to remember that the producer price index that was released yesterday set the table for some of these indicators in the PCE number, which is the Fed's preferred measure. So something like airfares, portfolio management, healthcare. I mean, the PPI number was more useful.
So just finally here, before we go to the data, Neil Dutta, is OER and other manufactured or synthetic inflation calculations, are they suggesting a new disinflation bout?
Well, I think so. I mean, I think if you look at market-based measures of rental inflation, they continue to, move sideways to slightly lower. And we know that the CPI measure of these things tends to lag market-based rents. I mean, the CPI is looking at all leases. A lot of these market-based measures look at just new leases only. But that just tells you that the CPI measure is likely to follow these market-based measures. And so I think once housing inflation is cracked, it tends to stay that way.
Right. Neil Dutta with us, and he'll continue with us after the CPI data. We'll try to give him a little bit of time to study into it. What a wonderful half hour for you. Benjamin Laidler to join us on the equity markets, and Freya Beamish will join us with a touch on China there in the CPI as well. We say good morning on your morning commute. It is about economics, finance, investment, and international relations. Right now, the key CPI report. I have been remiss. This is way more important than my focus with all these other distractions that we've had on YouTube. Subscribe to Bloomberg Podcast. We are humbled by the international reach of YouTube as we look at American inflation. Right now with the CPI report, Lisa Mateo.
This is breaking news from Bloomberg.
There we go. We'll start with CPI month over month for December. The expectation, like we've been saying, was for 0.4%, came in right on target at 0.4%. The prior was 0.3%. Now, when you take food and energy out of the picture, the expectation was for 0.3%, came in at 0.2%. We take it to year over year, and that was the expectation for 2.9%, came in right on track at 2.9%. And then when you take that food and energy out, the expectation 3.3%, that was a survey, came in just a tick lower at 3.2%. Now we see the market reaction really on Wall Street. We have NASDAQ futures up more than 1%, 268 points. We have Dow futures up more than 1%, 446 points, and even S&P futures up more than 1%, 63 points. Then we see the difference in the bond market. The two-year yield, 4.29%, down 7 basis points. The yield on the 10-year, 4.71%, and that's down 8 basis points. I know we have Neil Dutta standing by. I'll send it back to you guys.
Lisa, I don't know how you do that. Thank you so much. I mean, in real time, folks. I mean, you know, Karen Moscow, Lisa Mateo, David, the way they do that is just extraordinary. I'm going to delay here for a moment because Neil Dutta's got his call options to call into his broker. Our economic indicators, of course, always brought to you by IBKR. Will U.S. oil production exceed 13.61 million barrels per day in November of 2024? You can trade your prediction on U.S. oil production. You can do that at Interactive Brokers. Buy yes if you agree, no if you don't. Correct answers, well, they earn $1. Go to ibkr.com/forecast, and we thank IBKR for support. He's had 1 minute and 51 seconds to digest the data.
An eternity, yes.
I'm sorry, Neil Dutta, but it does go to not only year over year coming in a bit on core, but month over month. Dare I say, Neil, you nailed this.
You can say that. Thank you, Tom. We're still going through it, but I think a rough rule of thumb is you basically take core CPI and cut 1/10 off of it, and that kind of sets the table for core PCE. So
can you model core PC under 3% into 2025?
I mean, look, it looks like we're doing that the last couple of months. I think what matters right now isn't so much is inflation cooperating, because I think there's a very strong sort of fundamental case to make for why inflation should cooperate. The issue is whether the Fed's going to play along, right? I mean, if you look at where the Fed is and how they shifted from the September FOMC to the December FOMC, in September, they thought the risks to the unemployment rate were skewed to the upside, and they thought that the risk to inflation were basically balanced. In December, despite very modest, I would argue modest movements in the data, they completely flipped, right? So now they see significant upside risk to inflation, and they see balanced risk to the unemployment rate. And I think that's important because it opens the risk of a passive tightening of monetary policy. Like, just because the inflation data have cooperated, does that mean the Fed's going to start cutting in March? No, because they want to wait and see what happens at the other end of Washington, D.C. And so, I think there's a risk here where you continue to see kind of slowing nominal growth and the Fed kind of sitting back and waiting. And obviously that passive tightening of monetary policy could put additional pressure on the economy.
Neil, what's your sense of how long it's going to take to get that kind of clarity, for the Fed to get that kind of clarity of what's happening down Pennsylvania Avenue from the Eccles building? We're fumbling here trying to figure out how soon we'll get it.
I mean, David, you need to ask a political analyst, not me. I mean, I think, and it's also about the sequencing of policy, right? I mean, there was clearly a change in the Fed's tone from November to December. In November, the day after the election,
they're having to reckon with this finally. What might happen?
I mean, we need to see whether the administration kicks off policy with a round of tariffs. I mean, frankly.
Okay, that's fine. Neil, now, I want to stay with Neil Dutta here. Ben Laidler's waiting. Laidler said he's not coming on until the Dow's up 600 points. We're not there yet. The Dow up 542 points, SPX up 81 points. We're up about 1.3%. NASDAQ up 1.7%. Small caps, good morning, Robert Teeter, nailing that. Up 2.6% on the Russell. As Lisa mentioned, yields come in. The real yield comes in from a 233 launches to 2.25% as well. We're going to get to Ben Laidler and Freya Beamish. We are commercial free across the nation in this hour. Good morning on the Pacific Rim evening as well. Out on YouTube, subscribe to Bloomberg podcast. Neil Dutta, let's talk about this, and it's delicate. Don't give me, William McChesney Martin, LBJ in Vietnam. I'm sorry, the Fed is affected by politics. How will the Fed be affected 9 days after the inauguration?
Well, I think they're going to be in I mean, we already know they've put in some kind of conditional estimates for, many of them have, for tariffs, maybe deportations and a new immigration policy. And potentially fiscal reflation. So I think, look, I mean, to the extent that policymakers, in Congress are sounding optimistic about something getting done, I think the Fed's going to be in a wait and see approach, at least until then, to see what the details of that legislation will ultimately be. And there's a lot of obviously uncertainty around what the president might do. And I do think the sequencing is important. And if he kicks off with a round of tariffs, I mean, I think the Fed's likely not going to be in a forgiving mood with that. I mean, this isn't like 2017, 2018, where the Fed ultimately kind of felt the market and eased, right? I mean, this is we're coming off a period of very, very high inflation. So the Fed's going to be concerned about inflation expectations and what tariffs might do to that.
Neil Dutta, thank you so much. We just got up to, we was with Renmac, I should say. Neil Dutta, just incredible work out on LinkedIn as well. Folks, we got up to 580 points up on the Dow. So now we're going to go 20 points early on Ben Laidler.
Generous of you.
Right now.
Make an exception.
Benjamin Laidler, more than anyone I know, got out front of the pre-pandemic bull market. And more than anyone I know, even Yardeni and Campora, Brian Belsky at BMO, Stolfus over at OPCO, Ben Laidler was out early saying this is an extended bull market. Ben, over in London, thank you so much for joining us this morning with Bradesco BBI. Ben, on a baseball analogy, what inning are we in? How's the length of the bull market going?
So what game's that? We don't play them very much of that over here. So, I listen. We've just, I think, had a little bit of relief right now. Markets sort of, getting themselves in a bit of a tizzy that we were having a sort of a bit of a bond shock, that the Fed was, not supporting us anymore, that inflation was going to back up again. I think, this number now has just given us all a little bit of pause for relaxation, and maybe allows us to refocus a little bit on there's a lot of other stuff going on. Earnings season is just off to what looks like a pretty good start, and it looks like we're going to get double-digit earnings growth, which, let's not forget, I think is the core foundation of this bull market. And we're looking forward to the Trump inauguration on Monday, where I suspect, the market braced for tariffs is maybe not going to get, what it was maybe priced for.
In your study, if we get level, or dare I say gloom, higher 10-year yields, Ben Laidler, corporations adjust and adapt to that, don't they?
Yes, I think so. It's not good news. Higher bond yields in the US basically mean two things. It puts some pressure on valuations because US corporates have big valuations, and a lot of that value is very far in the future, so quite sensitive to higher bond yields. One, and two, about a third of US corporate earnings come from overseas, and those earnings come under sort of some pressure with, a stronger dollar, which comes with higher bond yields. So those are the two negatives. But you're absolutely right. Corporates have been deleveraging. Corporates have very high profit margins. Corporates, the one thing we've learned in the last few years is how adaptable US corporates are. So, I'll take it as a moderate negative if bond yields are sort of moving higher. But A, I think corporates are able to adapt. And B, let's also remember why bond yields are moving up. One of the big reasons is the economy is doing very well. This economy is on track to grow, nearly 3%. That's why earnings are growing double digit. And as I say, the broadening of this and the continuance of this is the core support of this continued bull market.
So you pick this apart. Looking at energy, that's really the culprit here, Tom, when you look at CPI, where you do see that sort of inflationary force there. Ben, you mentioned just a moment ago taking a pause for relaxation and reflection. How long is that pause likely to last? How do you navigate this period when you can exhale for a short moment at least?
Maybe till Monday. No, in all seriousness, there's a lot of cross currents here. We're feeding our way through, we're just kicking off earnings season. It's a pretty big earnings season. We're looking for this rebalancing, away from big tech, which has done all the heavy lifting, towards everybody else. If that happens, I think that is, fundamentally very bullish. We've got to get through the Trump, inaugurations, a lot of uncertainty as to what, that's going to mean. But again, I think markets are sort of braced, or at least partly priced, some of that. And again, my earlier comment, I take these higher bond yields a little bit in my stride because A, I don't think they're really signaling a dramatic resurgence of inflation, and B, I think they're a function of the fact that the economy is in a pretty good place. And if we did get a little message today that maybe this is a story of inflation stabilizing rather than anything more sinister happening, then I think that's all good news.
Is there an opportunity, Ben Laidler, in United Kingdom stocks? They got a government in an uproar. Full disclosure, folks, I can't keep track of it. I try to read about it. I have a cup of I have
Canada
coffee.
preoccupying you
Pharaoh
as well?
has tea.
Yeah.
Ben Laidler, do you drink coffee or tea?
I have to be a tea drinker.
It's like brown water. I don't get it. Ben, is there an opportunity in arbitrage almost within the United Kingdom, given all the political and cable gloom?
I would actually broaden this. I think it's US versus the rest of the world at this point. We've talked a lot about sort of US exceptionalism. I think that continues to sort of push ahead here. And the rest of the world has just got very small, very cheap, and with higher US bond yields, which is a higher risk-free rate, a stronger dollar, just is piling more misery on. And I think that story probably remains in place, at least in the very short term. But I think as we look further out, the opportunity is in the rest of the world. This US exceptionalism will ultimately fade, or maybe this bull market will broaden. And I think the US will be absolutely fine. But I think the real opportunity may be later in the year, once the dollar stabilizes, once bond yield stabilizes, this bull market begins to broaden. It's going to be in these 30, 40, 50% valuation discounts that you have in the rest of the world, including the UK right now.
Ben, what is going to be the catalyst for the broadening, the growing of breadth that you're talking about there as you see it?
So I think there's two. So I think one, within the US, which I think will bleed globally, is just tech earnings beginning to spread out to the rest of the market. And I think we're going to see, we're going to see some of that this quarter. And I think secondly, more globally, it's going to be maybe a little bit of relief starting on Monday if we don't see, full ball tariffs on day one. And along with that, maybe a stabilization of the dollar. We've had this massive dollar rally, some stabilization of the dollar, some relief on tariffs. I think that opens the door to the rest of the world to get a bit of relief. And remember, a little bit of love goes a very, very long way in the rest of the world because it's got so cheap, so small.
David, we called it right. Laidler came out with Dow futures up 580, and they're now up 644.
Well done.
Laidler's rocking the bull market. Ben Laidler, thank you so much. With Bradesco BBI in London.
Take him to a baseball game next time he's in town.
Christmas Eve 2018, he and I are opening presents, and he's like, Tom, up.
Yeah.
Nailed it. He was at HSBC at the time. It was a great call.
Christmas.
Future, it was a great, well, no, actually, it was the 201k was down.
Fair enough.
I didn't participate. I was in triple leveraged all cash. Tucker made out like a bandit. Futures up 90. The VIX under 18, 17.13. The VIX in 1 0.58 points. From the Interactive Broker Studios, the Bloomberg Business Flash. Lisa Mateo.
Yeah, we have a nice lift to the markets. This is after the U.S. core CPI. It rose 0.2% month over month. That was below estimates, the slowest in 5 months. Traders now pricing in Fed rate cuts by July versus September. We'll start with NASDAQ futures up more than 1.5%, 365 points. Dow futures up 1.5%, 640 points. And S&P futures, same there, up 88 points. The 2-year yield, 4.29%, down 7 basis points. The yield on the 10-year, 4.70, down about 9 basis points. Quick check in with banks after earnings. We'll start with JPMorgan. They're up more than 1%. Goldman Sachs up 3.5%. And we have Wells Fargo up 4.5%. But Citi up more than 5.5%. That is your Bloomberg Business Flash. David and Tom.
Thanks so much. Appreciate that, Lisa Mateo. Dollar weaker, DXY in under a 109 right now. Euro explodes. I'm kidding, folks. It's a surveillance sarcasm. Euro 103.28. Really, the story there is the euro hasn't exploded up.
Yeah.
It would be more to it. On a busy economic day, and we are commercial-free across this half hour with the CPI report, welcoming all of you across America. And on YouTube, please subscribe to Bloomberg Podcasts. And Bloomberg Surveillance, our support comes from Interactive Brokers, trade over 10,000 U.S. stocks, their ETFs, U.S. equity index options, U.S. treasuries, and more. You do it on your timetable. Learn more at ibkr.com/around the clock. I got ducky bumps. I got Neil Dutta. I go to Ben Laidler.
It's a technical term.
It is. It's CFA. And then
red dye number 3 might cause that. I don't know.
Freya Beamish, chief economist at TS Lombard. And yeah, we can do inflation, and the market's up like a moonshot, up 1.5%. Freya, the gloom out there is OMG, China's going to fall into the Pacific Ocean. You're expert at this. Is the big underestimation for 2025 that China will right the ship, China will heal, and will move forward constructively?
I think there's a lot of sort of sequencing that we can derive something useful from at this stage in terms of the legislative agenda in China, and actually also in terms of the US as well. I think with China, they're sort of at the stage where they're having to jawbone a lot, and markets just don't like that, understandably. They've said all of the sort of the good news, but they haven't given us the numbers. But because of the new administration coming in the US, and because everything is on the table, like we call this a trade deal, but it's not a trade deal, it's an everything deal. Fiscal policy is on the table. So that has to be a part of the negotiation process in the relationship between the US and China. And at the same time, the tariff story from the US, they have to sort of come in big. But at the same time, when they get to negotiating with China, I think that fiscal policy that we're all waiting for is a part of that negotiation process, so that China can't fire too soon on that. In addition to the fact that they do have their own kind of legislative agenda that has to be sort of worked through. So from that perspective, I think there could still be some good news in the pipeline, specifically with regards to redirecting towards consumer orientated fiscal policy, as opposed to just this let's use excess supply to solve problems of excess supply, which was always going to be deflationary, always going to crush returns in China, and just has been proven not to be working very well. I don't think the real economy is going to turn around very quickly, but we could, in terms of the news pipeline, finally get some numbers that could help things out.
Freya, what do these conversations, this dialogue look like? And I'm not talking about what the scene's going to be like at the Daitai guest house, where there's going to be that long table with 12 people on one side and 12 on the other, and 30 feet between them as they hammer this out. Is this going to be a constructive negotiation as you see it, sort of looking at sort of the way that China responds to whatever this president-elect puts in place when he gets back to the White House?
I guess the worry is that the big difference this time around is that for a significant proportion of the incoming administration in the US, these tariffs are supposed to be used for fiscal revenues. And to actually sort of get past the bird rule in the US legislative process, then they sort of have to figure in some way, unless there's some real significant hijinks up the sleeves, which is also possible. But that means that they have to sort of come in swinging from that perspective, and also from a negotiation perspective, they have to sort of come in come in swinging. When we hear the word kind of gradual, and the gradual is supposed to mean that tariffs are phased in from 2 to 5% per month, that makes me think, wow, that doesn't sound very gradual to me. So it has to kind of come in swinging, I think, from the U.S. perspective. But looking to the sort of a 12-month horizon and what could really change here, I think this could be on the table. There could be a really fundamental shift with regards to the international monetary system, with regards to the incentives that these surplus nations are offered to really change the way in which they organize their economy and restructure demand. To the benefit of reducing global imbalances.
Well, T.S. Lombard, their foreign exchange strategist, Freya Beamish, is with us this morning. I'm kidding, Freya. And what that devolves down to in economics and investment is we look at the litmus paper of the system. Freya, I'm busting your chops, but the answer is you're expert at this. I mean, if you look at the dollar and all the different currency pairs as the proxy of a readjustment of the international system, what does T.S. Lombard, with all the heritage of Charles Dumas, what does T.S. Lombard suggest dollar, or for that matter, what sterling will do?
Yeah, I mean, with it's hard to see on the face of it how you can escape the strong dollar with this kind of idea of U.S. exceptionalism. Everything they do seems to like tilt the balance more in favor of the dollar. And yet, when you hear someone like J.D. Vance talking to Powell in questioning, he asks, and I'm paraphrasing, what has been the effect of the U.S. dollar and its status as a reserve currency on the people of my constituency, on my electorate, on the middle income section of the distribution, and the implication is that he thinks it has not been a beneficial standpoint. And if you go back to when this current international system has its roots in the IMF in the 40s, it was the UK that was the deficit nation at that point, and the US that was the surplus nation. The UK proposal from Keynes was to punish the surplus countries by enacting a interest on the balances proportional to those surplus balances in what was called the Bancor Plan. Now that was never going to work because the US was not beholden to the UK in any way, because it was a gold system, not a sterling system. Whereas China at this stage, which is the surplus nation, is beholden to the US because it has to hold the dollars. So it cannot hurt the US without hurting itself. And that means, despite the fact that these are not allies and the likelihood of them sitting down and talking seems very remote, there is a path there to some kind of an international system that avoids the tariffs, which China also very much wants to avoid because they're so dependent on exports at this stage.
Freya, thank you so much. Freya Beamish, T.S. Lombard, commercial free for you in this 40 minutes. Neil Dutta, thank you. Ben Laidler, thank you. Freya Beamish, thank you. We now turn to the most important person. What do we got, 21,000 employees? Somehow you have to go out, David Gura, and find Anna Wong. This is the most important conversation of the year for me. The notoriety, the acclaim of Dr. Wong at Bloomberg Economics, extraordinary. Stephanie Flanders joins us now, driving all of our economics. Stephanie, where in God's name did you find Anna Wong? How did that happen?
She was lurking in this obscure financial institutions called the Federal Reserve. But she had a stellar resume, but I think the fact that she'd not been, and I should give Tom Orlick a lot of credit, the chief economist, was the key scout for her, I must say. Yeah. But the link there was that he had spent many years in China and was a China expert, as you know, is a China expert, and had come across her thinking about the Federal Reserve's analysis of China. So she didn't have a long track record. But she had, of forecasting the U.S. economy. But she had a period on secondment to the first Trump administration, the Council of Economic Advisors, which is obviously, among many other things, has made her an interesting person for us and has stood her with good stead in terms of forecasting, that is for sure.
Well, it's been wonderful, and the build-out of the team and the graphical interface of Bloomberg Economics is extraordinary. Ms. Flanders, folks, brings us over into the dreaded podcast world. Is it going to be longer than the big take? Is Trumponomics going to be 25 or 40 minutes?
I volunteer to do this. I subject myself to this.
We are going to be super disciplined, but obviously we felt there weren't enough podcasts in the world, and it was important to have another one. And you weren't giving nearly enough publicity to all of our great talent, whether it's the economists and the expertise we have covering the White House. But more seriously, I feel like we had with Stephanomics and now with Trumponomics, we're sort of filling a hole which I think is less covered, which is you bringing together the expertise of the on-the-ground reporting we have all over the world, and we will be talking to people around the world as well as who are impacted by Trumponomics, as well as often people in Washington and the White House. But we have those reporters who are getting the scoop and are smart in their own right about where things are going, and then we have stellar people like Anna Wong, who can give that economist expertise, but tinged with her own personal experience of working in the Trump administration and working in the Fed. So, I think that's a combination. All these bloviators just talking about Donald Trump and focusing on the politics. I think we can do a Bloomberg service in grounding that in the economics and the finance.
Stephanie, I've listened to all the iterations of the Anomics Suffixed podcasts, and you've released your first episode. I'll listen to it today, but help us understand how that's a template for what you're trying to do here. You sit down with the previously mentioned Anna Wong and with Kate Davidson, who helms a lot of our U.S. economics coverage out of Washington, D.C. What do you try to get at in that first conversation that you have on that first episode?
In the first conversation, the tagline is, has the bond market got it in for Donald Trump? I think we've obviously seen this major move in bond yields in the last few months, but specifically in the last couple of weeks. It's already inflicting quite a lot of pain in the UK and other places. How is the White House, how is the Trump administration likely to view that? Do they care about the bond market, or are they really certainly Donald Trump seems more focused on the stock market? But the dynamics of how that could shift the terrain of this new administration before it even comes in. And indeed, can we expect the bond market to respond more to Trump's policy if he ends up being even more, being active on tax cuts and other things? So that's the question. Yeah. But we'll have a different question every week.
One final question for us this week is, we hope this happens more often, Stephanie Flanders. Bring Greg's. It's Greg's. That's what you eat when you're at Jubilee Station. Stephanie Flanders. One final question. What's going to be the relationship of President Trump with the Prime Minister of the United Kingdom?
Well, I guess it depends whether he's taking his cues from Elon Musk, or who seems to really have it in for Keir Starmer, or from others who are a little bemused by the sort of aggression that Elon Musk brought to those tweets. So we will see. I think Keir Starmer really is the opposite of Donald Trump. He's a very sort of technocrat politician. It's not a match made in heaven, that's for sure.
Stephanie, thank you so much. The podcast Trumponomics, looking at all the depth and richness of economics here at Bloomberg, of course, with the leadership of Stephanie Flanders. The market, it hasn't pulled back. I think we were at 580 two cups of tea ago. We're at 660.
You're really hammering this home today. Yes.
1.6% up. I guess it's a massive short covering. You see it within the bond market. The 30-year bond was pushing 5%. We're at 4.89%. David, is it all clear?
I don't think it's all clear. I mean, as we've been living 2 weeks into the year here, it's there's very little stability. One coffee bean per day. But we do see markets reacting almost instantly, if not before the release of the CPI data, but enthusiastic response in light of what we saw in PPI yesterday and CPI today. Yeah. And we kicked off with these bank earnings. Lights out, stellar performance by the big banks here, from Citigroup to JPMorgan to Wells Fargo. A big week. Earnings season begun in earnest, Tom.
To me, it began with Delta Airlines. Yep. At the bottom there, they showed their credit card use as some form of relationship with Amex. I'm not sure about it. Was solid double-digit revenue growth, and you see it again with JPMorgan, even Citigroup with the share buyback. Doing well. I mean, where are we? Is it a week from now, tech earnings?
Yeah. What did you make of the Meta announcement? I mean, we mentioned it yesterday, of course, Meta cutting 5% of its staff. But in this environment, what does that say to you about the labor market?
I bust chops about it, but Zuckerberg was my CEO of the year, I think, 2 years ago. Mm-hmm. I mean, the kid grew up, period. And now we're going on to a new iteration.
Post Sheryl Sandberg.
Yes, absolutely. But, they're like lemmings off a cliff. They're all going to do what Zuck does. They're all going to do what Tim Cook does. And the answer is there seems to be a maturity, a discipline into their operational procedures now. Granted, COVID, they were just trying to survive.
Yeah.
And I really want, I mean, Amazon is what we really don't talk enough about. Are there enough Amazon packages at the Gura house?
Oh, we have to fold them and then break down the
Oh, you
boxes
do
and
that.
tie them up and bring them downstairs. It gets arduous for me.
We'll have to see. We're doing, we had Suzanne Vega on earlier. Tracy Chapman, one of her jewels. Please stay with us, Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. We say good morning to you across the nation on YouTube as well. On the 9 o'clock hour, after CPI, after Goldman Sachs, after JPMorgan, with Pam Bondi coming up in testimony in Washington. David Gura in for Paul Sweeney. I don't remember the madness of this January. The news flow is extraordinary.
Now, 2 weeks in, and it has been busy, and we've got Inauguration Day just a couple of days away. So it shows no signs of stopping, and we'll see what happens on day one, the much ballyhooed day one of the Trump second term.
Bank of America moments ago, their Situation Room, new yield, new return forecast. I don't have it in front of me, but the answer is all the banks, all the strategists adapting and adjusting to the cacophony of news. What you need to know is futures up 91 off core CPI coming in a tick better, the disinflationary trend perhaps in force. The Dow up 684 points, NASDAQ up 1.8%. Small caps. You loaded the boat on them yesterday, didn't you? You took a break out.
Yeah.
You're on the phone.
You thought I was getting a coffee.
Triple leverage Russell.
Right. Yes.
We saved the Gura family.
The Keene
up
Keene
2.8% right now. And you see it in the yield space as well. Let's do this. Let's go to the Interactive Broker Studios, a Bloomberg Business Flash. Lisa Mateo.
You did it all for me. There we go. We do see stocks, though, getting some relief from that CPI slowdown. Let's get to the numbers. So the core consumer price index increased 0.2%, rising 0.3% for 4 months straight. From a year ago, it rose 3.2%. There were also solid results from big banks. We'll get to that in just a bit. Right now, NASDAQ futures up more than 1.5%, 374 points. Dow futures up 680 points. S&P futures up 89 points, all above 1.5%. Yields falling. We have the 2-year yield 4.27%, down 9 basis points. The yield on the 10-year 4.67%, down 11 basis points. To currencies, the Bloomberg Dollar Spot Index down 0.4%. We have the Japanese yen up 1% at 156.40 against the dollar. The euro up 0.3% at 103.41 against the dollar. We have the British pound stronger as well. Haven't mentioned Bitcoin. There you go, up 3%. You're welcome. Just above 99,000. Let's get to the bank earnings. JPMorgan, Wells Fargo both posted those hefty profit rises for the last quarter. Let's get to JPMorgan shares up more than 1.5%. We have Wells Fargo up nearly 5%. Then Goldman Sachs soared past estimates as equity traders delivered their best year on record. Goldman Sachs up nearly 4%, and Citigroup recorded trading revenue for the fourth quarter beat estimates. It was also that buyback of $20 billion in stock that they reported. Those shares up 5%. And finally, BlackRock, they're up more than 5%, pulled in an annual record of $641 billion in client cash. That is your Bloomberg Business Flash. David and Tom.
Thank you so much, Lisa. We're going to tick up 700 points in the Dow, up 1.6% right now. As S&P adds, as Lisa, that was phenomenal, by the way. Squeezing in all that news, the way Peter Schiff couldn't do that.
Oh,
I couldn't do that.
Yeah.
It's amazing. Seriously, thank you so much, Lisa Mateo, for coalescing everything in together. We have the right guy at the right time. Peter Schiff's good at any time. You should see him play Stratego at Academy. They got Stratego, you know, people have foosball out in the food court. In Academy Securities, they got Stratego board games out for all the
numerous games
the military
being played at
type.
once. Yes.
I can't, the Zen, I mean, the interns nailed it in booking you this morning. Peter Scheer, head of macro at Academy. I got whiplash, gloom. Up we go. We still haven't gone down in the Dow futures. Why are we getting this whiplash?
You know, I think people came in a little bit pessimistic on the job side, so that's surprised everyone. And because of that, I think everyone was a little bit overestimating where inflation would come down. We got a bit of a relief rally. The problem I've seen is we've had kind of a very consistent march from about 415 to 480 on the 10-year Treasury. And most days, even when good news comes out, Treasury rallies for a bit, then gives it up. So we'll see if it's able to maintain this. I suspect we're going to sell off over the course of today and tomorrow as we really come into next week, which could change everything.
Let me ask you just about the new normal of the data point drivenness of all of this, and Tom's describing it as whiplash, but it does seem like we are really going from one data release to the next, trying to read the tea leaves of the Fed all the while. Does this continue in perpetuity? What's going to get us back to a point where we're stepping back and taking a broader look at the economic data and the rhetoric coming out of the Federal Reserve?
So I think there's two things. One is I'm not sure how much any of us actually trust some of the economic data. So I'm sure people are going to pull through this and see, okay, what about this seems right, what's not right. I mean, the jobs data last week seemed ridiculously good, right? It's 74 to the 75 people who actually put in estimates in the Bloomberg system were too low.
Incredible.
And I don't think people are that bad at their jobs. So I think the data, and kind of right on that, right? They've been pulling back on the data. And away from this, I think a lot's going to become much more clear once Trump really puts his policies in place. So this is all kind of noise until we really know what's going to happen with tariffs, what's going to happen on immigration, what happens with Russia and Ukraine, and what happens with the Middle East.
We're getting ready for a change in the firmament. The terrain is going to change here when we get this new president-elect. How much does it change for the Federal Reserve? We have Jay Powell so adamant that 2% is the target, won't brook any questions about whether that should be moved or if they should kind of go more broad than that. Does the Fed have to change as we see the rest of Washington kind of reacclimate to a new leader?
I don't think so. I think they're going to try and stick very much to their guns that 2% is their target. Unless something changes via Congress, they're going to try to stay with that.
They're wedded to it.
I think they are going to face a lot of pushback on that, and I think it's going to be really hard to maintain because I do think a lot of what Trump is pushing, including more domestic production, is going to be inflationary. If it was cheaper to make it here, we'd already make it. Having said that, I don't think that's bad. If we do this 3 to 4 years, we'll start seeing some benefits, and we'll have an economy where there's a true middle class.
You've studied bull markets, and I get it. They all have a different character. I'm in the camp, Peter Scheer, that we've had such a cacophony since August, the third week of August 2007, that an X percentage of people out there really don't know what a bull market is. And I go, what inning are we in and all the media stuff. Forget about it. They're a behavioral construct, and they feed on themselves. Is that what we're doing now?
Yeah, and as a credit guy, I'm actually probably better at looking for bear markets. Mm-hmm. And what I'm starting to see is a few things that are concerning me that remind me of where we've been in the past, where we had very sharp corrections. One is the triple leverage things, right? So you've got triple leverage.
I agree. The leverage thing is starting to percolate.
25 billion of that. Now you have these single stock ETFs, so they're leveraged. These all have
NVIDIA Forpal leveraged
and MSTR double leveraged. Yeah. These have really big drags because they have to do these rebalances every day. Now there's a lot of things that just got filed where it's a equity with selling 0-day to expiration options. I think the 0-day to expiration options is going to bite us in the butt. And
but how do you respond, Peter Scheer, to the wall of money that's gone into cash in the last X number of weeks?
Again, I think, one, that's been part of why we've had this pullback, but I think cash is an okay alternative. All of a sudden, right, we're probably sitting here somewhere around 4.5% in your money market funds, maybe a little bit more. Why not keep that? I think there is a concern with the volatility. And the thing that, to me, and this is probably, it's too early, so I'm not panicking or anything. I do not like the fact that you have Bitcoin ETFs. Now you have MSTR, which is effectively a leverage play on Bitcoin, which is now in the NASDAQ 100. So it starts feeding into QQQ and triple Q. You have MSTX, and you used to have a clear separation, say, between cryptocurrency and the NASDAQ 100. Those links are starting to come together. And when I think back about the great financial crisis, right, it was all these weird little links and all these market value type structures that trigger together. When XIV, the inverse ETFs and ETNs on the VIX blew up. Same sort of thing. I'm not like panic mode, But you're starting to see like this is a trend I don't like, and I'm not sure why the SEC approves so many of these things.
Is it a trend that only accelerates going forward here? And sort of what do you think is motivating the surge of interest into these strange flavors of ETFs and other products like that?
Come on. He's never been in a finance course in his life. David, it's called greed.
It's called greed.
It's called greed.
I would
it's as
actually
basic
even
as
go
that.
with, I was going to say something similar. I will do some stuff for various other retail investors, and to the moon. It feels like there is a cohort of investors who are indifferent between being really, really rich or living in their basement and don't care about a normal, steady progression. And I think that's what leads to this gambling and betting.
Ask a question.
Oh, sorry. I thought you were chiming in. I don't know. You're
I'm
mumbling
talking
over
to
there.
Si.
You were asking if I took finance.
I'm asking him how much to bet on the Bills this weekend.
How are you going to navigate these next few weeks? So we've talked about the whiplash. We've talked about what might change. How do you piece together, all of the ways that this might go here once we get a new president in office?
So I tend to be very good at range trading. That's what I kind of like. And I think this is going to be a range trading type market, right?
Fair.
When people get too bearish, buy. And especially in around Trump, right? I think if you just go back, anytime things seem really good and can't go wrong, he will say something that changes that. And anytime you think everything's going to be an epic disaster, he'll say something to change that. Again, look at TikTok. All of a sudden, maybe Musk gets to buy that, which I'm not sure whether that's good or not. But to me, it's going to be 2025. Our keyword for this year is going to be messy. Not chaotic, but messy. And so you want to trade these ranges, and you want to be cautious about getting too comfortable, which I think is very different how it was in the last 2 years.
Yes, very
I got one more question, and you're not going to like it. His general counsel's going to be like, Tosh,
All right.
put the surveillance
I'll
court
push
in his
back
mouth.
from the table here.
David and I covered yesterday a discussion with a newly minted Secretary of Defense.
Presumably.
More than any other shop we deal with, Academy Securities has a heritage of public service to the nation with our military. Not what does Peter Scheer think, but what do you hear from your sources of a confidence that the Secretary of Defense will pay respect to the generals and admirals at the Pentagon?
So I think beyond any individual, I think when our team talks, they're looking for a military that progresses, figures out where we're going to be. I think there's a lot of questions. Do these large platforms still make sense? Do aircraft carriers make sense? How much money should be spent on drones? What sort of technology do we need? How do we go forward? How do we make the military so they hit the recruiting goals again, right? Something's happened where Space Force and the Marine Corps was hitting their goals. So I think they need to, revitalize this. I think there's a lot of concern about how this is being led in the past, how it's going to be led going forward. I think there's an optimism, and at the individual soldier level, it's good. But how do we prepare for the next war? Are we stretched too thin? One of our generals, General Ashley, he quotes, can't remember who he quotes, but this probably goes back 10 years ago. Our enemies used to fear us and respect us. Then it switched to our enemies maybe no longer respect us, but they fear us. Now it's unclear that they respect or fear us, right? We've had so much measured response that we have to go and figure out deterrence again properly. Like, deterrence clearly fell apart a little bit if Iran's comfortable attacking Israel, if Russia's attacking Ukraine.
Yeah.
So I think that's what we're looking for.
Yeah, but General Ashley came out of the intelligence sector with huge public service. And again, like we saw with the chairman of the Joint Chiefs of Staff, he came out with his father serving in Korea as well.
Yes.
Do your people have a sense we can get back there with this newly minted administration?
Yes, I think there is a degree of comfort that we'll again, I don't think the Department of Defense has done a budget in 8 years. And I was just with Admiral Walsh, four-star Admiral, last week in Chicago. He's telling me, and I've got to listen, we got to get rid of Stratego and start playing Go. Because Chinese play Go. That's how they
There
push.
we go.
And so that's the thing for this year.
That's the only information I got out of this discussion. Peter Scheer, thank you so much. Just brilliant with Academy Security. She played Go as a child, joining us immediately in London on the foreign exchange update. We had her on recently. Huge response. Audrey Child-Friedman joins us, Chief G10 FX Strategist. Audrey, I'm squeezed for time today. Let me just cut to the chase. With the disinflation tone reaffirmed in the United States, do you model out that this is a dollar peak that we've seen in the last 10, 20 days of trading?
I think it's very early and premature to conclude that way. Yes, Tom, we have very good news on the inflation front today for the month of December, but it's not just about the inflation story. It's also about the growth narrative. And by tomorrow, we have the retail sales numbers for December for the US economy. If that comes in very strong, dollar bulls will come back and charge again. So I think we need a combination of disinflation and not just a 1 month story. And we kind of have that in place already. And I'm fairly confident it will be confirmed in the months to come. But on top of that, we also need to have more evidence that the US economy is decelerating. And that's, I think, the big question mark for the market at the beginning of the year.
Audrey, we talked a few moments ago with Freya Beamish, and she was talking about how the Chinese are jawboning their currency. Let's talk about how the U.S. may jawbone its currency here going forward. We have a president-elect who would like a weaker dollar. What are you going to be listening for? What is your sense of the effect that will have here on the strength of the dollar in this new term?
So I think any kind of headline suggesting that, such a strong dollar is not desirable, that will catch a lot of attention. You'll probably see the dollar selling off on the back of that. But, we go back to the same old conclusion of you need to have a fiscal and tariff environment that's not so bullish for the dollar if you really want to see the dollar coming down. And at this point, the signals we've had, both on tariff and on fiscal prospect for the U.S. economy, that have been fueling the dollar bullish narrative. So this is where the answer is, fiscal and tariff.
One final question, if we could, Audrey. I'm so sorry it's short today, but we got wound up here on American politics linked into investment. On cable, I said this earlier, I believe it was to Stephanie Flanders. Is this just an opportunity with the political overlay of the United Kingdom with Cable South? Is there a point where politically and economically you step in and go long sterling?
I think there will be a time when the case becomes more compelling for sterling upside. I just feel that the recent noise we've had on UK yields have had added to the sterling bearish case, but that wasn't the real trigger. For me, the real trigger was a budget that will question the growth narrative for the UK economy this year, that will probably encourage more rate cuts from the Bank of England, and that doesn't help your currency. So, of course, nothing is a one-way trade, but I think if you want cable to rebound at the moment, you're probably better off hoping for the dollar to turn than for any specific UK bullish story.
Audrey, we did Kona Haque earlier with ED&F Man on the moonshot and coffee. Do you drink coffee or tea?
Coffee.
All right.
Finally.
2-1.
Make
2-1 from our
Audrey
London guests. Very good.
To come back on. Finally, somebody that drinks coffee on this show. Audrey Child-Friedman never drinks Sanka. Thank you so much with Bloomberg Intelligence as well. I know he drinks coffee, not tea. With our news in New York City, John Tucker.
Tang. Actually.
Tang, thank you.
Let's start off with this. Currently, it's in scores of products from candy to cold medicine. And now Bloomberg has learned the artificial food coloring, red number 3, is going to be banned. It'll take place in a few days. The move comes more than 30 years after the Food and Drug Administration prohibited the use of red dye number 3 in cosmetics after studies found tumors linked to the dyes in lab rats. Consumer and patient advocacy groups petitioned the agency more than 2 years ago to revoke the use of the dye in American diets. About 26% of baking decorations and dessert toppings have the dye. It's also found in 16% of chewing gum and mints, 13% of candy, and 11% of cookies and biscuits. In Los Angeles, crews from as far away as Canada still struggling to contain those massive blazes that broke out 8 days ago. And now the same combination of high winds and low humidity that set them off in the first place, threatening the region again. Los Angeles Mayor Karen Bass says the next 24 to 48 hours are going to be critical.
If you are told that you are in a warning zone, it would be advised that you actually take that opportunity to leave. Get packed, get everything ready.
Mayor Bass says she's issued directives to help fast-track the rebuilding effort. But first, conditions on the ground have to be improved. Israel and Hamas accusing one another of delaying a Gaza ceasefire. Will officials say an agreement for a 6-week pause in fighting is still likely soon. frequent failures to get a deal finalized have left everybody cautious. Secretary of State Anthony Blinken, speaking at the Atlantic Council, says he thinks we are close.
I believe we will get a ceasefire. And whether we get there in the remaining days of our administration or after January 20th, I believe the deal will follow closely the terms of the agreement that President Biden put forward last May and our administration rallied the world behind.
Secretary Blinken saying the sides are discussing a pause to allow for the exchange of hostages and a boost in aid to Gaza. And Pete Hegseth, Donald Trump's pick to lead the Pentagon, appeared to be on track for confirmation. During his hearing, he dismissed allegations of past misconduct as anonymous smears. Well, today, more confirmation hearings. This includes the Secretary of State nominee, Marco Rubio. And Elon Musk's space company, SpaceX, has had another landmark launch.
3, 2, 1. Ignition. And liftoff. Go Firefly, go iSpace, go top.
A Falcon 9 rocket with a pair of commercial satellites on board, taking off from the Kennedy Space Center overnight. The satellites are carrying lunar rovers heading into the private sector moon race. One from Texas-based Firefly Aerospace named Blue Ghost. That'll attempt a moon landing in about 45 days. And global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. That never gets old.
Yeah, we'll have to see. John Tucker, thanks so much. Publishing moments ago from Ec 10 at Harvard, Jason Furman on the inflation report. Here are the numbers of his ecumenical study, very valuable. David Gura, 1 month, 2.7, 3 month, 3.3, 6 month, 3.2, 12-month inflation, 3.2%. This is on core inflation. Not quite there yet.
No, not
That's
the
what Jerome
disinflationary
Powell
vector you so often
I talked to Jerome
Jay,
Powell.
yeah.
Jay said, we're not there.
We're not there yet.
We're not there. Professor Furman, thank you so much for that. We'll effort Jason Furman
Econ 10
as we can. Yeah, it doesn't have a license plate. ManQ has a license plate. Futures up 81 from New York City. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the year-over-year change in the U.S. CPI exceed 2.8% in January 2025? Well, you can trade your prediction at Interactive Brokers. Buy yes if you agree, no if you don't. Correct answers. You can find them there at ibkr.com. All right, we'll head to stock futures on the rise. Bond yields sinking after a slowdown in consumer prices. It kind of boosted the hopes that the Fed will be able to cut interest rates this year. We'll get to NASDAQ futures up more than 1.5%, 334 points. Dow futures, same there, up 1.5%, 646 points. In S&P futures, up just over 1% at 81 points. Two-year yield, 4.26%, down 10 basis points. The yield on the 10-year, 4.66%, and that's down 13 basis points. We have Brent crude at $80 a barrel, WTI crude at $78 a barrel, and the Bloomberg Dollar Spot Index down about 0.4%. Now, yesterday we learned about those job cuts at Meta. Today, Microsoft in the spotlight. Sources telling Business Insider the company laying off employees on teams including security, sales, and gaming. No word on the extent of those cuts. And crafts retailer Joann filed for its second bankruptcy this year. And finally, PepsiCo started talks with the founders of Halderam Snacks to buy a minority stake. That's according to the Economic Times. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. David and Tom.
Lisa, thanks so much. The heritage of the program, folks, is we do look at things at 60,000 feet, but it helps to come down and look at it. You know, you're just above the runway and the 777's going at 189 miles, and you're like, how are they doing that? Joe Mazzola is expert at the interiors of the market, not nearly talked enough about within the financial media, trading and derivative strategist at Charles Schwab. Joe, is there a bet in the market right now? If I see a short cover like this morning where the Dow's up 1.5%, Russell up 2.4%, are there big bets being made now? Do you see that at Schwab?
I think the bets that we see right now, Tom, on the institutional side was that there was a lot of hedging activity coming into the PPI and the CPI number. I wouldn't be surprised to see a lot of that alleviate. Could give kind of a short-term bounce to the overall market. And then, if that occurs, the next level that I would really kind of keep an eye on is Friday's high, right? Right before we kind of got that sell-off into the weekend. I think that 58.90 level, if we can get above that and stay above that, bounce off this 100-day moving average that has been a bit of a magnet the last couple of days. If we can get that little bounce, we might see something that's a little bit more sustained. From the retail perspective, I think what we've seen at our level is really just kind of shifting in kind of the dynamics, right? A lot of some of that interest that we saw throughout the course of the year, where technology, communication services, right, a lot of the Mag 7 buying, that's dissipated a little bit. And what's really interesting to me, Tom, is in December, the two sectors that kind of led buying at Schwab were energy and healthcare.
Where do you see that money moving now? So you talk about the hedging that we've seen over the last few weeks, going into the data releases that we got last week and early this, including today. Where is that money moving to?
Well, I mean, the one that I mentioned is energy. If you kind of look at the sector level, percentages of the stocks above the 50-day moving average is something I look at quite a bit. It is one of the 11 GICS sectors that actually has more than 50% of the stocks above that 50-day moving average. There's only one, right? I mean, we've seen so much kind of that reduction of risk activity in the last couple of weeks that a lot of that has moved into that sector. While that, whether or not that carries forward, I think a lot of that depends upon crude. If crude can stay above the 75 level and kind of push towards 80, I think you'll see that continue.
How are you seeing the uncertainty, perhaps anxiety that we're seeing broadly kind of translate into the moves that both institutional and retail investors are making at this point? Is there a tendency here to wait and see? Do you see investors taking action? How would you sort of characterize the motivations that you're watching here at this period of uncertainty?
Sure. What I would say is there's been investors taking action, especially kind of towards the end of December. Two of the names that we saw a lot of heavy selling in, or at least trimming, I think is probably a better way to put it, would be Apple and then Broadcom. Two names that had set highs during that month, especially Broadcom. You get a 40-45% rally, after the earnings kind of intra-month. And as opposed to maybe what we've seen in the past where people are adding into that strength, they've been trimming into the strength. So I think leading into this year, we already started seeing some of that beta come out of the portfolios.
This is such a great joy to have Joe Mazzola on with Schwab on. Just to give you an idea, and I love the phrase trimming. I have no idea what, buy, hold, and trim. I guess that's what it is. We're going to go to the opening bell. I want to come back and talk to Joe Mazzola within this great equity market about the comment he just made on Tim Cook's Cupertino shop. I got Apple, 10-year track record, 28.9% per year. So I think, it's going to be, I really want to talk to Joe about the lessons he's learned on trimming and on rebalance as well. To review, an inflation report, good bank earnings as well, signaling a continued disinflation of some level. Futures up 81 to get the trading day started. It's a bull market. Lisa Mateo.
You've got it, and this is after a CPI slowdown. We'll start with the S&P 500 right now, up more than 1%, 79 points, 5,922. We go to the Dow, up more than 1.5%, 679 points, 43,196. And finally, we move on to the Nasdaq, up more than 1.5%, 307 points at 19,354. We have the 2-year yield at 4.26%, down 10 basis points. The yield on the 10-year, 4.65%, that's down 14 basis points. We head over to the Bloomberg Dollar Spot Index. That's down about 0.5%. And a quick check of Bitcoin up above 98,000, up more than 2.5%. Got to get that in for you, Tom. Quick check of the banks. We have JPMorgan up 1.5%. Goldman Sachs up 4.5%. Wells Fargo up more than 5%. And Citigroup up more than 3.5%. That is your Bloomberg Opening Bell Report. David and Tom.
Lisa, thanks so much. David Gura and Tom Keene here, and just a terrific set of conversations today. Thank you. Out on YouTube and subscribe to Bloomberg Podcast. This is a strategy, folks. David and I, we went to an executive lunch at the McDonald's on 3rd Avenue. And David got out a 3x5 card and he said, "What are you going to do?" And I said, "What we're going to do is have good conversations with people with experience." That includes Joe Mazzola, head of trading and derivatives. Joe, I'm going to ask you this question. It's not a Liz Ann Saunders question. It's not a Kathy Jones question. It's the mathematics of this asset allocation racket. Does rebalancing work? You say trim Apple, but with all your years of experience, does Joe Mazzola rebalance?
Sure. I think once you get to the point to where there are some gains that I don't want to say are unsustainable, but at least maybe represent a little bit too much risk in the portfolio. I mean, I think back to my pitch trading days back in the day, Tom, when we would look at our deltas, right? And if our deltas would get a little bit too long, we had a little bit too much exposure, and that is part of kind of the risk management that we did as options traders, and I think that can make sense from the equity world as well too. I will say one thing, guys, and you had an interesting conversation with a guest earlier today, where you were talking about kind of ETF versus kind of stock selection. I 100% agree about the stock selection this year. I think that you're going to see some pockets of strength, but when you see the fund flows that we saw overall in the industry, November, December, the highest that we've seen in the ETFs at the end of the year, it kind of tells me that maybe the market's got a little bit ahead of their skis, and I think that in 2025 you're going to have to be a little bit more selective in that choice.
Joe, thank you so much. Joe Mazzola with us with Charles Schwab. Really appreciate that. With the Dow up 600 points, SPX up 1.5%, 87 points. The VIX is under 17.
Quiescent? 16. Does that count as quiescent?
It's like whiplash is what it is, okay. And that's CFA level 4. We got to talk about this. It's important. Pam Bondi is out. We're not going to give you gavel-to-gavel coverage today. Charles Grassley is holding court right now, the gentleman from Iowa.
Chairman of the Judiciary Committee.
And he has a birthday coming up in September.
How old? How young, shall I say?
92
years young.
The welder from World War II. He was a welder. That's what he did, like in his youth.
And more active than you on X or Twitter, I should say.
Yeah,
so embracing that to some degree. But he presiding over this hearing for Pam Bondi, former Attorney General of Florida, President-elect Trump's pick to be second pick to be Attorney General in his administration. That hearing getting underway. I think we're in the Hart Senate office building today. It's a bit more modern, and you see that giant marble slab behind the senators. So it has less of the kind of historic appeal of Dirksen, where the hearing took place.
And they're all drinking coffee. Nobody's drinking tea, right? It's America.
This is your through line today. Coffee for the senators in the hearing today.
91 years old, holding court, and he's not. He's very vital. I mean, he seems to be with it. Well, listen, we'll have that. And David Gura, of course, look for the big take with David Gura, where they will discuss all of these events up to the inauguration.
And Joe Matthew, monitoring all of this, and there really are. It's I think 6 major confirmation hearings taking place.
What are you doing on the inauguration day? Do you have an assignment?
I will be with Tim Stenevec and Carol Massar in the afternoon. So we will be focused less on the pomp and circumstance and more on what executive orders are signed by the president and where things go policy-wise.
Can you get an interview with Mrs. Obama?
In absentia. We'll be in absentia at the inauguration. We got that in a statement yesterday.
We'll talk about that at some point. David Gura, wonderful. The Dow up 657 points, SPX 1.5%, the VIX under 17. On YouTube, stay with us, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks on the rise, yields falling. This is after today's softer than expected CPI print offered some relief. So we have the NASDAQ up more than 1.5%, 309 points. The Dow up nearly 1.5%, 608 points. And the S&P 500 up more than 1% or 78 points. Let's get to yields. The 2-year yield, 4.67%, 4.27%, just changing, down 9 basis points. The yield on the 10-year, 4.65%, and that's down 13 basis points. We head over to commodities. Brent crude $80 a barrel, WTI crude $78 a barrel. And to currencies, the Bloomberg Dollar Spot Index down 0.4%. We have the Japanese yen up more than 1%. The euro, British pound stronger this morning. And we want to go to chip stocks because sources saying the U.S. will unveil more regulations to prevent advanced chips from being sold to China. So we check in with Taiwan Semiconductor. Right now they're down 2% in Japan. Samsung down 0.3% in Japan. As we look to NVIDIA, well, they're up about 0.8% in Intel up about 1.5%. End off with another check of big banks. JPMorgan up about 0.6%, but Goldman Sachs up more than 5%. Wells Fargo up more than 4%, and Citigroup up more than 3%. That is your Bloomberg Business Flash. David and Tom.
Elisa, thanks so much. The 10-year real yield for global Wall Street in a ginormous 10 basis points. That's a big move as well. David Gura and Tom Keene, and of course, this is an important conversation as we line up fixed income dynamics, as they say. But this is, again, folks, some of the inside baseball here at Bloomberg Surveillance. Ira Jersey's job is under threat because his Aston Villa is playing the chairman of Bloomberg Philanthropies, Mark Carney's Everton, this week.
Okay.
So is this the one game, Ira, where you hope Aston Villa loses so you can keep Mr. Carney happy?
Not at all. Hey, it's such a tight Premier League race this year that we can't give up any points if we can avoid it.
We'll have to see. I mean, that's a big game. The Tots play Arsenal.
This is your team, the Tots.
Yeah, the Tots
Hotspurs.
play Arsenal. Good morning to the Langham Hotel and the cigar bar in London. Everyone there is an Arsenal fan.
I have been with you there and know that to be a fact.
It is a fact. Thank you. Arsenal, it's a derby, as John Farrow would say. I think he misspelled. It's a derby.
Okay.
We'll go from there. Ira Jersey, my head is spinning. How do you get beyond the whiplash of these markets to a sane view out 6 months or a belief out 12 months?
Well, you have to have a view on the economy, and of course that's not only ever changing, but there's all kinds of mixed signals, right? For those of you who want to be optimistic that the economy is going to hold on and that maybe the Fed's only going to cut 1 or 2 more times and be done, there's plenty out there for you to hang your hat on. And then there are some other little nuggets of data here and there, particularly out of Europe, that suggests that the global economy overall is slowing, even though the U.S. seems to be at least a little bit immune to that. So that's the only way that you can have a longer-term view, I think, on interest rates here. And the reason you see all this volatility is twofold. One, people got very bared up on the market, people worried about debt sustainability and the like, and we got very oversold. So when you got an as-expected CPI report today, you saw a lot of people probably just covering their shorts, and we're going to wind up probably finding some kind of consolidation range here, at least for a little while, until we get more clear data as to what the path of the Fed's going to be.
Let me ask you to play armchair psychologist here. And are people on edge? When you look at the moves we've seen in the bond market, for instance, is there a pervasive anxiety here? You mentioned the as-expected CPI report. We moved from data point to data point. But is there a sense of anxiety amidst the uncertainty?
Yeah, I think there were a lot of people, and certainly a lot of the investors that we've spoken to the last couple of weeks were really worried that there would be an upside surprise to this CPI report, with commodities having rallied quite a bit and with wages continuing to be reasonably strong. There was a fear that you were going to get a better than expected number or a higher than expected number. I don't know if that's better necessarily. And in doing so, people were worried that the 10-year yield might, reach all the way up toward 5%, and that's one reason why you saw all this volatility. But there were so many people short. You look at some oscillators on some technical charts and patterns, and you saw that maybe we were a bit oversold. That's gone away now after this rally. And you had some data out of Europe that the U.S. market barely budged when you had gilt yields down quite a lot on their weak data too. So I think it was just a confirmation that things aren't terrible here in the U.S.
We make jokes about it, folks, but Ira Jersey and his team do world-class work on cash. Inform us, Ira, without people on YouTube turning off the station. Inform us about the cash dynamic right now.
So if you're talking about the cash dynamic in things like money market funds continue to get inflows, and probably will, because even if the Federal Reserve cuts 1 or 2 more times, you're still going to have yields on money market funds far higher than that of most bank accounts. And because of that, people are going to choose to put their incremental savings into money market funds. And that's going to drive things like demand for repurchase agreements and actually add liquidity to the Treasury market, which you've certainly seen over the last couple of years. And then secondly, there's still going to be high demand for T-bills. So I know with the incoming administration coming in, people are saying that, we think that Trump's administration is going to extend the debt and issue more 10-year and 30-year bonds instead of T-bills. But the demand for the front end, demand for those T-bills continues to climb. So I don't see any reason for the Treasury Department to actually cut those.
David, get one more question in, but it can't be on soccer. Mark just emailed me, no more Everton talk.
No more football, none of that.
Yeah.
Let me ask you about the debt limit. We haven't talked about it. We've talked about the uncertainty of policy, fiscal policy. Where are we in this government's ability to pay its bills, Ira?
Yeah, so so the debt limit is a thing, and sometime in the next week or so, the Treasury Department's going to have to start using extraordinary measures. So these are basically accounting gimmicks with some of their non-marketable debt that they can use in order to issue more public debt. So they should have enough room until early June at the earliest, but they probably can't get past August 1st. So sometime kind of in the early summer, we're going to wind up with a situation similar to what we had in 2023, unless the Republican Congress suspends the debt limit.
Aston Villa all the way. Ira Jersey, thank you so much for joining us this morning. The Dow up 670 points. The VIX 16.75. With our news in New York City, John Tucker.
And Tom and David, the death toll remains at 25 from the wildfires that have devastated the Los Angeles area for more than a week. Today, more than 10 million people facing the same tropical storm force winds and bone-dry conditions that started these fires in the first place. But Palisades Fire Incident Meteorologist Rich Thompson says fire crews and residents should start to get a break tonight.
Looking into next week, we have another round of Santa Ana winds potentially affecting the area. But definitely, at least for the weekend, we should get a couple of days respite from these Santa Ana winds.
Well, thousands of firefighters battling the flames. Some of them came from as far away as Quebec. President-elect Trump's pick for Defense Secretary Pete Hegseth faced questions from senators about his qualifications for that role. Democratic Senator Tim Kaine confronted Hegseth on why he failed to disclose to Trump's team that he had paid a woman in a settlement who accused him of sexual assault.
If it had been a sexual assault, that would be disqualifying to be Secretary of Defense, wouldn't it?
That was a false claim.
So
He's
you
talking about a hypothetical.
Well, despite tough questioning from Tim Kaine and other Democratic senators, Hegseth appears on course to win confirmation. Russia today launched a major ballistic and cruise missile attack on regions across Ukraine, targeting energy production and compelling authorities to shut down the power grid in some areas. Despite freezing winter weather, the Russian Defense Ministry said it had launched a strike on critically important facilities of gas and energy infrastructure that ensure the functioning of Ukraine's military-industrial complex. It didn't give the target locations or other details. And Bob Dylan fans could get a piece of history from the iconic singer-songwriter. An auction taking place January 18th. Big collection of Bob Dylan memorabilia set to hit the auction block.
Hey, Mr. Tambourine Man, blast
This is Julian Auctions. They say 50 items connected to Bob Dylan will be up for sale, including early handwritten drafts of Mr. Tambourine Man, Dylan's first #1 hit. The items actually come from a personal collection of a rock journalist, Al Aronowitz, known as the godfather of rock journalism. That one doesn't do it for me. I'm going to go with Back Pages, my #1. Okay. And David, A2?
Sorry, I'm just getting back from getting a coffee.
What's your favorite Dylan song? I mean,
the interns didn't get your coffee?
No, I had to go get it myself. Have you seen the Dylan movie yet?
Sweeney's not.
I don't think I want to see that movie.
People of a certain generation
Tom,
have told me to go see that movie.
Really? You think?
I'm not. I'm like you, John. I'm just like I haven't decided yet.
Right. Seen it, done it all. I mean, the documentaries are so much.
All I can say for the younger crew: listen to Nashville Skyline. When it came out, we stopped with Lay Lady Lay on it. From New York City, this is Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. It's real simple. David Gura in for Paul Sweeney. We've had a lot of fun the last 3 days, and some
Are you
of
going
it
to miss me?
Yeah, I'm going to miss you.
All
You know,
right.
it's like I tear up. I got Charles Grassley in testimony with Miss Bondi in Washington. We got the politics going on. Too much Chapel Hill talk, though.
I tried to put some in there, but yeah, all right. I'll watch
Scarlett
myself
Fu
next
emailed
time.
send more Cornell
More
talk.
Cornell
That's what
talk,
we do
okay.
as well. Right now, Tracy Alloway joins us with Odd Lots. They're on fire. They're doing like a 6-part history of the Eurodollar. They got Trichet entering like in the next episode. But what gets my attention is when a heavyweight like Hugh Von Steenis shows up and says, shut up and read it. Alloway, that's what you do. Tracy Alloway on private credit. I mean, that's a big deal.
Hugh might be being a little bit generous because I'm citing some of his research in that piece. And Hugh, by the way, do you remember when he was at Morgan Stanley?
Yeah,
he used to be banking analyst at Morgan Stanley.
He owned the high ground.
During the Eurozone crisis, he was one of the best banking
Yes.
analysts out there. Like, he spotted it before a lot of other people. Anyway, he's talking about the relationship between private credit and insurers. And I think this is such an underappreciated
Yes.
dynamic. Private credit is exploding in size because it's getting funding from big insurers.
And then it won't.
Yeah, well, because if you think about it, insurers, they don't really care about liquidity that much, right? They just need to invest on really long time frames and they need to get yield. And so
Right.
private credit offers up the perfect assets. And so now you look at some of the figures from Oliver Wyman, where Hugh now is, and he says that Apollo, something like 80% of its credit assets are funded by insurers.
Yeah.
No one ever talks about that.
David Goldman at Bank of America a million years talked about this. How are you and Joe Weisenthal going to fold private equity credit into Odd Lots this year?
We got to get Mark Rowan on. I think that's the goal.
Press release today, Zelter promotion to some form of presidency. Rowan agrees to stay around for 5 more years.
Wow, I didn't see that was today?
That was today. Tucker told me. He doesn't tell you
Tom
things.
glancingly mentioning this 3-part series on the Eurodollar market. Explain why that's important. Tom, with a tendency here to move to private credit, tell us why this is well worth listening to.
I appreciate you bringing that
I love a
up.
shameless plug.
I was trying to tempt Tom with like the tagline, this is like Dan Carlin's Hardcore History, found a Bloomberg terminal.
All right.
But it's basically 2 hours of Josh Younger from the New York Fed, formerly of JPMorgan, and Lev Menand from Columbia Law School, walking us through the creation of the Eurodollar system. This is a more than $10 trillion market. It's the biggest form of shadow banking out there. And again, it's something that
Right.
doesn't get a lot of popular attention. And it's the thing when Gary Gensler was asked what could be the source of the next big financial problem,
Yeah.
he said Eurodollars.
Okay, so go to Lagarde's conversation with me in Jackson Hole 2 years ago, which upset a lot of people because we talked about things you don't talk about. Can they make this work without fiscal union?
Well, I think the really interesting thing about Eurodollars, and one thing that you will get out of listening to the series, is it is the effort of decades of multilateralism. It's the U.S. talking to other countries to develop things like swap lines. The Eurodollar doesn't work without dollar swap lines. You remember those from the financial crisis,
Yeah.
right? And so if you talk about the current climate today, you start asking things like, well, if something really big happened in the global financial system, would we have that type of multilateralism today? Would the U.S. be as willing to provide
Right.
something like dollar swap lines?
This is why Odd Lots is so successful, folks. It's the usual they
She's
do.
convinced you. You're going to listen.
No,
It's worth it, I swear. You know, it's not even me and Joe talking. It's just Josh and Lev. We've cut ourselves out completely.
It's great because these are some of the big issues there in the certitude of private credit. We heard this from Peter Scheer and others today as well. I mean, it's the vogue right now. It's almost a verbal leverage. I'll invent that phrase.
Are you
Are you stealing weekly from Hugh Von Steenis?
Not all the time, but we've had him on to talk about private credit,
Yeah.
and he is perfectly positioned because Oliver Wyman is, it's a consultancy that's advising banks on how to deal with something that is both a threat and an opportunity.
Surveillance headline. He'll be on this show in a few weeks' time. I'm
He
breaking
will be?
news right here. He's been booked.
I've got someone.
Says
knows.
Eric.
Tracy Alloway, thank you so much. Joe Weisenthal, thank you so much. It is Odd Lots. We say good morning.
Thank you for the Eurodollar.
Today